This is VM's kind of music right here. Oh no, this isn't it. And you guys catch that front? Check this out. $3,600%. 65 cents was the low. Look at that. Whales were in at $1. Sick move. These are some that I traded back in the day. I still have a few. I have Sol from $25 over here in September, October. I don't even touch it. I have a link from $10 right before it popped. I got in here in this breakout. A little XRP. It's garbage. My average is actually pretty high, like close to 60 cents, but it's fine now. My sleeper shitcoin is, where's it at? XP. It's called XPR. Oh wow, it hit 3 cents. Or no, like no, less than that. 0.003. I have a lot of these. It's kind of just a lotto. I bought in this garbage right in here. A friend of mine told me about it. Actually, my golf coach that I used to see all the time, he's into cryptos and he's got a lot of people. He's like, dude, my buddy said this thing's going to go to $1. I'm like, all right, well, it probably won't, but I'll still buy. Look, the all-time high is at 5 cents. If it hit all-time high, I'd be happy. Plus, it's called XPR and XRP. Maybe people will start to buy it just because they're thinking it's cheaper, but the whales are in. This is BTC on the daily. Oops. Extensions to 150. Do a fib extension from the flag. So the 0.1 or the 1.4 extension is the target on this baby. On this extension, it will get stuffed there. So what we would want to see is Bitcoin come back in, do a little shakeout. I don't think it's going to happen, but we have these compressing up. We know what happens when this situation gets created. It comes back down into here to buy every dip on these crypto stocks. Okay. I don't think it will though. I think maximum we'll see this level to like 102, 500. Because Vince remapped it, and he because I've been bugging him about it. Telling him it's going to 120, and he's had it in distribution, and I think he finally restructured into reaccumulation. I would love to tag this before March, and then maybe give us a drop down, reaccumulate off this level, and then go another leg higher into June. Get that 150 level. All right, is it time? Yeah, it's fucking time. All right, let's get into it. Broader market outlook. All right, so on the daily, okay. Why is it doing that? Sorry, my speakerphone is like. There we go. All right. Still inside this massive rising wedge. Pretty interesting setup here. Now, I mean, last week was crazy. They opened us up uh, roughly like right in this area. This was the open, it was a push up, and then they sold us all the way down into Monday. Monday was the low, and they sprung it on the 4 hour. The 4 hour was a spring. It was a shorter spring. We were expecting a little more downside. We didn't get it. Pretty much caught every single leg in this downtrend on the way down. We did miss this move up, and so we had some swings, which obviously were nice, and then overnight action too, which is great. But ideally, I mean, obviously, in a perfect world, you really want to be nailing this for a swing on the way down. I saw the tweezer on the 4 hour, so did Vince. We all saw it, but the problem is we weren't. It didn't check off some of the things that we liked. There wasn't a lot of volume on this tweezer. There wasn't extended, like a really aggressive selling pressure out of the zone. Like it was just like, oh, drop below and then see ya. So that was a little, interesting. So right now we're in a place where we're gonna stay pretty neutral on the indices. We're not because one thing that I wanted to see, and I was pretty much expecting to see, is this high broke right here. I expected that high to break, and that was at 60.18. So we didn't do it, and that's kind of a little bit, but we're a little cautious right now because that high was not broke. Because the schematic and the print that we're looking at is accumulation on the 4 hour. And for it to be valid, it has to break that spot. Okay, so if this is a true accumulation pattern, this is this would be B2 right here. Okay, and that's B2, phase B. The second pop, this is B1, phase B, first pop, right? So you have B1, B2, and we have to break these ranges up here for it to be a true accumulation. I don't know if I've ever seen them do this where, because like this structure looks great, like down here. Here's a spring right here, okay, and then it shoots up, tests the level, and then it rips, drops, and then rips. Okay, there's LPS, and this should have broke. So like that's what I'm saying. It's like this range right here, it should have broke from what we're seeing. So we should have seen this break into the 30 level or even 40, come back down, and then flag and go higher. We didn't do that. So we're going to stay neutral. So that's in terms of the daily, that's all we're really watching right there is this spot right here and this spot above it, right there. And we have a gap that still is yet to be filled right here. This is the gap. It has not been fully filled here. We also have our $12 million whale on the 7th of February on the 60-40 strike that has not exited his position yet. So I've been tracking him for 3.5 weeks, almost 4 weeks. I've been watching him. And when he leaves, then we're gonna have caution. But right now, it's still uptrend. Everything looks good on the structure. This is a bull flag right here that's broken out. The extension of this flag should get us to a new high. It should break us to the high, roughly. So like I said, right now we're chilling. We're going to be neutral. We had some really nice setups in the swings, but I think this week, because we have such a short week, the week is futures are going to be open tomorrow. I might take some trades actually, like not to trade like for like to make money intraday, meaning I might take the trades for a swing through the week. So if I do, and it's a high quality setup, I will alert it. So there's a couple things that we're watching. Obviously, the first thing is this 4 hour extension of this big bull flag. We broke the downtrend, but for those that just hopped on, we're watching this spot. This has got to break here, right? If it breaks, okay, then we want to see this spot break over here at 60.44 roughly. We want to see it break and then flag in a tight pattern. And once it starts to flag, this flag could be a big one. So it could go here, then it could shoot all the way down, right? All the way down to, my golden pocket here, right there. Ideally, this is what we want to see. Shoot up, break, maybe in futures on Monday. It breaks, or even in Tuesday, pre-market, it breaks, and then they rug it down, right? Set the low for the week. Then we buy this low. Then and this could be a perfect back test too, right? Because you can see on the 4 hour, there was no retest of the breakout. So here's your line. They just blew through it. So that's why I'm cautious on upside plays right now for the market. Doesn't mean we can't play calls on other shit. But so ideal scenario is Monday. And what I'm expecting is I want to see Monday futures up, and I want to see Tuesday futures way up, like almost to the point where people feel like, oh my God, like I'm missing out, right? Up in this range, up in here. And I want to see a spike up, and I want to see a dump hard on Tuesday. The reason why is because Tuesday is VIX expiration. And those VIX calls are getting cooked. But if they spike it and shoot it up and fill the gap, which isn't much, it's like 40, 50 points, right? Or 45 points away. They spike it up, tap the gap, maybe break this top, which would be huge for the accumulation schematic that we're looking for. This would make it very, very easy to trade this week and for next week too. And we could load some really nice swings. Small accounts can get into some cheap swing, and we can start fucking doing some damage. Right? So ideal scenario, pop up on Monday into Tuesday, pre-market, and then they rug it on VIX-X on Tuesday, spike the VIX, dump, fuck with people, get people going, maybe get a back test here on the breakout, and then the flag starts. Then it pops up this whole week, comes down, pops up, and then we come into FOMC. And if this holds, this last move down, so we'd want to be accumulating calls for a swing in this whole bottom, basically my golden pocket to the back test zone, which would be, I don't know if they're going to give us 60 or 68, but right in that zone. The lower, the better, right? Now, if the downtrend, if we do this on the 1 hour, okay, I'll use it different. So say we come up, shoot up, comes down, and then it starts to do this. We're not buying fucking calls. Fuck no, we are not. Absolutely not. We need to see it go down and then shoot. We could buy calls here, but we will have a tight stop, right? And we'll have time. But if it doesn't get an aggressive move back up to the top of this range here, then we have to be cautious and understand that the schematic of an accumulation pattern on the 4 hour could be wrong, or it could be invalid. And we'll be watching a couple things like the dollar. We don't want to see the dollar kick above 109.50. Okay. And then so if it does start to, see this is a flag right here, pops up, pre-market, rugs, comes down, and then we're like, oh man. Well, if we start to see reaccumulation here, and it starts to go, oh man, we could take calls. Then we know they're going to bring it back to the top of the range, which is a nice move, 50 to 100 points up. And then we could dump calls here and then start to look, get ready for the next one. And then next move down into the bottom of the flag, because that would create a really big 4-hour flag if they did this. It would be like this. This would be crazy. Shoot it up, bring her down, bring it up, bring it down, and then get tighter. And on this last drop, you load calls, and it fucking launches. And what is that? The bull pennant, right? And so that would be ideal. They could do it in a tight format. They could do it in a loose format, right? So whatever they're going to give us, we'll find the range. And it's easy to find the range because if they pop it up here, we know this is the top, right? And that's where we're going to want to sell short-term calls, 0 DTEs, 1 DTEs, 2 DTEs, even like weekly calls if we're trading like Apple, Microsoft, Meta, all those stocks, right? When the indices hit the zone, we'd want to be getting out and getting ready to go short again for the next move down. Then if this is the bottom of the zone, we know that they should not go lower than that because that would invalidate it unless they're going to do a actual bull flag, right? Which could happen. That could happen too. So that's what I'm looking at here. That's kind of what I want to see. I love to see shakeouts early in the week. And with VIX-X, typically what's interesting is the VIX OPEX is they typically mark a top for the week, which is weird, right? So that's a pattern that we're going to keep an eye on. So that's why I say we're going to be neutral, because we also have the dollar, which is not really doing what we were expecting it to. It is coming. It's coming down. Obviously, let's go to the DXY. Where are you at? Actually, you know what? Let me just go here. What? All right. Sorry, just give me a second here. All right. Well, I don't have it on here, but I'll just use this. This is fine. I don't want to keep going through my sheets. All right. So this daily, it needs to come back. This needs to reject. Let's take a look at this really closely. Okay, so you have a really clear level right here. Very clear, right? So when you guys are charting too, you want to be looking at this stuff, right? So you have a wick there, a wick there, a wick right here, a wick right here, a wick right here, and a candle close right there. Like, look at that. 1, 2, 3, 4, 5, 6. 6 taps on this level. This fucking level is going to tell the story for China. No doubt. Structurally, what do I mean by structure? Because everybody talks about, structure. What do I mean by structure? I mean candle formations. How the candles form in the uptrend, at the uptrend, and then come down into a downtrend. That's structure. That's what people are talking about. Structure is also the flag. It's a bull flag, right? This is stair stepping. This is structure, right? So when you're talking or thinking about structure, you're looking at the structure of the candles, which is telling a story about the supply and the demand. Now we have clear reversal pattern right here, right? It's an evening star reversal. It's not a textbook one with a doji and a bullish candle on the left and a bearish candle on the right. That's textbook evening star. Doesn't fucking matter though, because you have a bullish close above, you have a bearish close here, and then you have a bearish engulfing to match it. Pretty symmetrical, right? That's what I look for. I look for symmetry in candle structure. I think it's very important. The more symmetrical a candle structure is, the more power is going to be behind it. Now, what we want to see is we do not want to see this thing close above 109.50, roughly this wick right there. If it closes above that, then the DXY is going to go higher, and that will put pressure on the market without a doubt. So we're going to be watching the DXY. So 109.52 is really going to be the line in the sand. And if it creates upside, then this could be actual bull flag in an uptrend and go higher. Take a look at the weekly. The weekly failed to close lower, right? So it's still not technically like you have top up here, 114. You have some you have resistance right above us. So we could see this too. Let's say this is a big level right here above us, 109.78, or sorry, 110.78. That's a clear level, right? And right here's a big level, obviously. If they pop this at 110.18, it's going to go to 110.78. Then the question is if that breaks, then we're going to probably see, 111.89. And then underneath us, we really want to see this level break right here. Okay, so when you're drawing your trend lines, it's important to say, actually, we're going to move this up right there. Let me see. That's a spot. Why do they have weak wicks here? It's kind of a zone. We'll call this a zone. Yeah, roughly there, and then we'll say right there at 108. So these are some zones on the dollar. I want to keep a close eye on this dollar because if the dollar does do what I think it will do, I think it's going to come back down, and then that would really boost China. Okay, let's pop over to China quickly. Okay, so I'm bearish on the dollar. Okay, I think this is a nice bearish candle, but it is in an uptrend, so it could invalidate, and then the daily could extend. Now let's take a look at China. China has fucked so many people, even us in the room, like here and there, and luckily we haven't chased like aggressively, but we've made some good money. We had an unbelievable trade on KWeb on the gap up over the weekend. It was like, I don't know, it was like close to 2,000%. It was sick. That was a fun trade. So let's take a look at the KWeb weekly, right? So we clearly are holding the point of control on the weekly, which is great. They bounced it hard off of it. This is a weekly tweezer bottom on KWeb. KWeb is like the ETF that holds a bunch of these like really good quality Chinese stocks. Okay, now let's take a look at the HSI, Hang Seng. Let me go back to my other. Oops, wrong one. We'll go here in China. I have my stuff drawn. All right, let's take a look at the weekly. Okay, so what I love about this weekly is it had a really bearish move, but then it closed up the next week above the 50% retrace of the following week. Now, for this move to really be like really good, I would love to see it. It needs to get above what level? This little supply zone right here, right? So basically, let's call it a break of 20K on the HSY is going to send the sucker all the way up to this upper zone at 21.4 roughly. Okay, that would make sense to me because we have the Chinese New Year coming up. We have Trump meeting with Xi Jinping, and a lot of these stocks are looking the same. Like this is a bearish, or this is a tweezer bottom, right? Very big move from the bottom. You haven't seen a move like this really at all in this downtrend. Like the amount of selling, and then they matched it and then bought it pretty much right back up. And you can see on the weekly on BABA, the whales are back in instantly. That was all buy volume. They have earnings on the 29th. Okay, take a look at Baidu. Same thing. Baidu has a really dirty setup. Really dirty. Like, so the reason why it's dirty, anybody know why? I'll just kind of point this up here. What's going on here on Baidu? This is why I took Tesla calls the last week, I think it was, and they went bonkers on a gap up. Is this not many people know what's going to know this setup? Anybody have an idea? You come on, voice, and say. Well, 4 hour. Yeah. It's at the FV. This level right here at 83.55 is the apex of the triangle. It's a big deal. It's a really big deal. So I'm going to show you what Tesla did. If I can find the pattern from that. Okay, so here's Tesla, and I'm going to show you the apex that I had. I think it was there. Was it there? Hold on a second. Let me find out here. Oh no, it wasn't this. It wasn't this triangle. It was this one. From that point, it was a short-term one. There. I think it was this. Let me see here. There's something, I forget how I had it drawn. It was something like this, I think. I can't remember. But the point is I know it was right in the zone, and they gapped it down, broke it up, consolidated, and then it flagged. I think it was up a little higher, actually. Yeah, it was a downtrend triangle. So it was like right there. There it is. And this was up. Yeah, that's what it was. There we go. Got it. Okay, so I had the downtrend, the most recent downtrend tap, and I was waiting for this. This was intraday. So look what happened. So this whole structure was built out tap. So trend line strategy. Here's your trend line automatically drawn, right? Tap. Now you have this point and this point, and then you have these 2 points right here. You should, by this time, you should have this whole structure drawn out. So none of this price action here is even there. So what do? How do you trade this? You sure as hell ain't taking calls up here, right? But you can take weeklies off this trend line, absolutely. Because look at this, 87 to what? To 402. That's a nice move. That's nothing crazy, but a $5 move, nice, right? Scalp it. You can scalp stuff. You don't have to hold for 500%, right? But really, the big point is we didn't really touch this because it was consolidating in this fucking box. And then we watched it and did a breakdown, and then it popped up. But then I'm seeing all this bullish flow right at the apex. Look at this. This is fucking crazy. This is the power. Triangles and compression, right? So you have compression, a lot of compression. So it was wide here, comes down, and it just coiled up. This is compression, big time. Then what happens? Boom, they drop it and then rip it right back into the compression zone. Then what I saw was this. You have an apex here, right there on the triangle. And what's happening off the end of that triangle? All this stuff falls right into Wyckoff. Like, so if you guys are thinking, well, this is a different strategy. No. This is all the same shit. Okay. My job is to put the pieces in a basic format so you can use it as actionable intraday strategies instead of saying, well, what's Vince posting, or what's this going on, or what's that going on, right? You can actually use these tools, and then as you learn more, you'll be able to read schematics better, understand supply and demand, compression, and where big fast moves come from. That's all that matters. And then you'll know when you look at Vince's schematics, like, oh, I see what he's saying. Oh, that's where I really want to get puts, or that's where I want to get calls. And if we don't alert it or not, you can still take it and make money. That's the point, right? So really compressed, obviously. Then what happens? Bull flag, off the fucking FV. This is or off the point of the apex. A bull flag right there. Then look at this move, man. I don't think any rooms bought calls here except for us at this time. Literally, I know Dog Mom remembers. I alerted them right fucking there because I watched the bull flag as soon as this candle closed. Right there. I remember Dak. I know Dak remembers. He hit this too. But once I saw that candle print, I was 100% confident they were going to rip it into close because it's too compressed up. You're in a bullish move and you're on the apex. Like, there's no way they drop it. They can't. It's too coiled. And then the dips got bought too fast. So it was an easy one. These calls went absolutely bananas. I mean, look at that move into close. Just into close was, a 10-point move, and then they gapped it up, right? And then what happens? They gap it up. Everybody fucking chases, and look at this shit. They chop people up and rug calls. And then look what happens. It comes right back to the FV, the apex right there. And what does it do? It puts in a reversal. You can't make this shit up. And then if you want to get it even deeper, we're sitting on a fucking volume shelf right there, a massive one that the apex is sitting at. Like, isn't this cool? Like, this is pretty cool to me. I mean, it's like, but not many people talk about this stuff. What are you thinking, Big Cat? I haven't heard your voice in a while. Oh, you did? Every time I see your name, I think about that meme or GIF.
Hey, bro.
Hey, bro.
That's
It's a good
that's
one,
a
yeah.
funny one. Yeah.
So I was just saying, did you hear what I talked about the apex?
Yep, on Tesla, right? Yes, I'm just watching it right now.
Yeah. So, anyways, yeah. So, that's a cool one. That's a nice recap. Now I wanted to talk about MSTR. and why we rinsed this baby down. I mean, this was our bitch this week. I mean, it really was. Like, we slapped this thing around like it was nothing. And I'm going to say this one more time. You guys hear me talk about a stock on a Sunday like today, and I have conviction, and I bring up multiple facts and why I think that we're going to rip. And maybe you're, okay, maybe you have a small account and you're like, well, you know what, we're going to do the SPY off the 2 p.m. algo. That's fine. However, when you see such confidence in the setup, like I don't think I have had this much confidence that we were going to hit 395 Friday from this print right here on Monday. I literally said it Sunday right here. I said, we're going here on Friday. Anybody remember me saying that? Anyways, what I had said as a recap was this: left shoulder, head, came back in. It's hooked already. It already hooked into the weekend. And I said, boom. I go, you know what this motherfucker is going to do? It's going to boost. And then it's probably going to come here and then rip like crazy. Right? So and not only that, the best part is we had all these other stocks like Coin, Riot, Mara. They had the same look, you guys, the same look. Like that's a sector teed up and saying to you, buy me if you want free money. Now, when I say shit like this and I'm in a sector of BTC shit and I'm talking like this, if you have a small account and I alert a contract that's under, 350 bucks, take one. Just take one. Because you have to think of it like, okay, my account's only $500-$600. And I take one, yeah, that's a big risk, right? But also, what are you trying to do? You're trying to scalp for 50 bucks and then barely take your call, like I mean, I get it. It's tough. It's fucking hard, right? It is. With a small account, it's very challenging. But when you can get MSTR at a discount that's where the option IV is so crushed and it's telling you that there's a move this week happening and we alert calls on the week, you got to take that risk. You have to. And the same with Mara. Like I couldn't have begged people. I begged people to take calls on that swing. It was out 2 weeks. They were 34 cents. And those are going to be going in the money. Monday probably. Monday or Tuesday probably. Tuesday or Wednesday. Those will go in the money. And we still got 2 weeks. Right? And I even said on Friday, I said, wow, I like adding to these at 50 cents. And so I guess my point is when you see these setups and we talk about them on a Sunday, put them in note, right? Because you can buy a cheap contract for $150, $200, and you get a move like this on a Monday, right? From 109 to 330, and then you're like, wow, I'm already in. Maybe I'll just hold. And then you hold for just because if you get a contract on Monday and the stock's been beaten down and it's got a reversal set up and you know that there's a potential because 33 said we're going here, which is 100 or 90 points higher than where we're at, you got to think to yourself, well, maybe I should hold it for a couple days. Let me ask 33, should I hold it? And then I'll say, fuck yeah, hold that shit, right? And if you take it and you hold it for 2 days, you take 300 bucks and you're probably sitting on $1,000. Right? So you double your account, then you take it off, and then you wait. And when we get a beautiful back test right here that we went over, we got calls here. And those went from, again, the 370s went from 330 bucks. They went up to like 2,400. So you could have used some of the profits or some stuff and reloaded and then taking your account from $400, $500, $600 on a higher risk trade, but knowing it's a high conviction because on the 4 hour, Intraday, I said this. I go, my son, he doesn't want a nap. He just wants to party. Let me get rid of this. Hold on. Okay. So on the 4 hour, I know I said this on Monday. I said, what did I say? This is one of the most beautiful setups in the market right now. Cream, remember this or no? Is Cream on? Yeah. I told, and what I was looking at was this. Does anybody know why I got a hard on from this setup right here? I was bricked up, man. I was so bricked up about this. I almost full ported weeklies. And I guarantee you, if you look at the fibs, this is RS's fucking full port level discount range. Guarantee the zone is right here.
What is it, like a reversal pattern there? On a launch pad volume shelf? No. Coming at the box.
Who's chatting? I can't hear.
Sorry, man. It's OJ.
Oh, what? Yeah. So this is a 4 hour print, right? Look. So what I'm looking at is you're right. Yeah. It's on trend. So what is this trend line? Let's take a look at this from the daily. All right. So this daily, yeah, I don't have my trend line down here. I mean, I really don't have, and I could, but I have it a little tighter. Right off this. This is a powerful doji, right? Dragonfly doji right here at the bottom of a downtrend. So I hook my anchor on the trend line off that, right? And then I took it and I drew it. Oops, reset. I drew it right here off these wicks, right? I really did it off the bottom, right there. Okay, and if I go to the 4 hour, I bet you it's matching up better. And you can even do this too. You say, well, that one really doesn't set up well. This one sets up better. Tap, tap, multiple taps. But I guess the main point is it's pretty close to the downtrend. So when you have this 4 hour coming into a downtrend, and then what happens? This candle OG right here, this structure is gold. If you guys remember anything, don't forget this. Gap down, bearish, engulfer right there. Okay? Then that doesn't matter so much. But the point that matters is we're right here on a trend line. Okay? And we're here on structure to the left. Support. And then the big thing is this right here. This candle right here tells the whole story. Not whole story, it tells 70% of the story. Okay? Because this is what happened. The sellers came in, they shoved the candle, closed it. Then the candle opened right here at 310. Yeah, look at that. Perfect. Exactly. Right to his level. Yep. And then what happened was the buyer shot the price all the way up. So that means there's buying pressure within this candle a lot, right? It shot it up, and then the seller's like, no, 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 no. We're going to keep it down here. Then the next candle opens, and it closes above this doji, guys. It closed above the bearish candle, and it was done. The story was written. We were breaking out, and it was a confirmation on the 4 hour at 326. Think about that. If you knew how to just simply read structure in what I just literally annoyingly teaching in here so much, structure and understand what happens. And the best part is here's how much confluence there is. I'm going to list it off. It's a lot, actually. You have a reversal on the 4 hour. You're sitting on trend. Okay. On the daily, it was signaling upside. You have an inverse head and shoulders set up, ready to go, ready to launch, right? So you have that too. Whoops, shit. Then also, excuse me, the 4 hour had a target. Tap, tap, tap. Also, from down here at 326, you had two targets. One, break to the trend, right? That's a $30 move. The second part would be after the breakout, you buy the retest if you get it. We got it. So it's one to the trend line, back down, wait for the retest, and then grab it for the target. And that's literally what we did this week, like that last week. That was literally the play that I took. If you look at the trade zones, if you look at the timestamps, we got calls right here at 2:30. The same time we did Tesla, we got calls on MSTR, and they fucking ripped right here to my target. Done. Then we waited, retest, and got in. As soon as the retest on the hourly confirmed, we got in and held. And then boom, booyah, right to the target. So this is like a ideal, like these Tesla and the MSTR plays are not SPX or SPY or QQQ, but it's a perfect example of how you can take $200, $300, right? I'm not saying, hey, grab the 400s down here. No. You could have grabbed the 70s here, and that move, is a 5-6xer, right? Minimum. Right? And then you can use profits on the retest. But like mentally, you want to be thinking this type of stuff. And then when you get into a trade on this 4 hour, you don't think about what it's doing on the 15-minute. Really, you don't. Like you need to be thinking, okay, we printed up here. Now the 4 hours it just needs to hold above the zone. And it did. And it's just chopping. It's not doing anything. Then you get the fast move up and you get the fuck out. Like literally, it hit the target to a T. Perfect. And you get the fuck out. There's no questions. It's not like, oh, I'm going to hold the runner. No. You just get the hell out. Okay? And when the break happens, you do not chase. You wait till it retests the trend line. Perfect. ABC setup. Boom. Taps it, and then it's over. Goes up, chops, gaps, and see ya. So you shouldn't be, when you get into a trade on a 4 hour, you should be trading the 4 hour. You shouldn't be trading the 15 and the 5. Okay, as long as this 4 hour holds this doji high or this structure, right? This whole structure, as long as this is intact and this 4 hour closes up, the only thing that matters is this. This candle right here, right there, just needs to close above this level, above the 50% retrace. So if you get in roughly at 25 to 26 or whatever, you could be adding down here, right? But you shouldn't be freaking out, closing out. Yeah, your contracts are going to be down 20, 25% for sure if it did that. But you know that this structure in the back of your mind is very, very bullish. And as long as it closes above a 50% retrace of the 4 hour, it's still bullish, right? Now, if it closes below, you can stop out. That's fine. But if it closes above and it closes right here, you can add to the position, right? And then you just, go back. We could do 4 hour candle by candle. Okay, so this candle would have to actually close down here for you to get out. It could wick all the way down, then shoot back up and close up here. And then this one's got to close here. And this one would have stopped you out, but it doesn't matter because you had a nice, this one would have stopped you out barely. But still, that's still a nice move you could have sold into right here. Because this would have opened up, shot up, and then closed down. Any questions on that little MSTR Tesla recap? Because these are not difficult things, but it just takes time, and you need to have the, when we're doing the prep, right? So you just got to remember, like, and when I start talking and started learning MSTR, it should be in your head, like, oh fuck, that's the ABC, that's the Gucci setup. Let me see if I can afford to take a contract. Okay, and then you say, hey, 33, can I take the 390s? Can I take the 380s down here? Just ask questions. Yeah, it's just a textbook. So now looking at this, right? And we're saying, all right, now what? Now what do we do? Okay. Anybody have an idea what we're gonna do? I'm gonna make a gap area. So the low on the candle is 380.15. Whoops. Okay, and the high on this candle is 370.26. There, lock it down. All right, now we have some areas of that are important to us, right? Now we can develop a trade plan. We identified the gap, okay, that's below us. Whoa, Harry, hold on. Here we go. All right, and then we also have a trend line, a channel that's developing. Right? So here's a channel. Now, this doesn't mean that we're going to go to the bottom of the channel at all. Okay, it doesn't mean it at all. But this is nice because this is symmetrical here, right? That's beautiful. I love symmetry. Makes me happy. But you can see that's a beautiful channel that it's in. We have a gap below us, right? And then we are at the resistance. So we're not chasing calls. And we also have an RSI that is slightly extended. So that's why I would like to see maybe a hold or a slight gap up here into 414 on Tuesday and a big wick and go fill that baby. Now, if we hold this level, we'll be looking to take calls and layer into calls off 370, the gap fill. And then we would look for structure to build. If I'm right on the 4-hour, this is accumulation. So this would be this. What this could do is it could just sit here like this. So it's broken the range. It could up, down, and then go. That's what I want to see. I want to see the first drop to the bottom of the range. Then we start layering into calls, right? We could sell it to the top, which is not a big move, right? But it would be nice to see this thing flag out right there, right? In this zone. Then I could just, it's a very easy read and an easy trade because then we could take $600 calls for 2 weeks out or 3 weeks out and catch this big move up to 500. And those things are going to go bonkers. Okay. They have earnings coming up too. All right, that's the trade plan for this stock. Okay, on to the next. Is there any stocks that anybody wants me to talk about specifically? Because I'm going to start going through the ones I like. Okay. All right, here's Disney. Beautiful setup here. It's not quite where I want it, but it's still really nice. It's kind of, so I wouldn't draw a trend line like this. You could, like, you could have one trend line there, right? And then you have another one, you know, kind of right there. Looks about right. But then you also have to have one up here, right? This is your kind of intermediate wedge right there, right? So you have a bull flag and a falling wedge within the bull flag. There's the channel. So we're in an area that I'm very, very interested in on Disney. And they have earnings on the 5th. Okay. So premiums have gotten roasted here. It's in a block on the 4-hour too. So this is going to be probably an opportunity for us to get a excuse me, to get in some nice calls. These are cheap too. And if they beat earnings, like, we're gonna have some runners, right? We could literally get, what was the high here? 18. My target's is at this 2240 level. So if we're down here at 107, let's take a look now. Where's the all right, I'm gonna do some good. Nobody's gonna be watching this either. Not many people, at least. Everybody's gonna be focused on crypto. And that's fine, that's perfect. So when's their earnings? It's the 5th. So we could take February 21st calls on Monday or Tuesday. The 120s are at 77 cents. Okay. If, just say you have say you have a small account and you grab two, right? That's 150. Okay. If we get a move just to the top of the range by earnings, or let's say maybe they break it out to 113 and then come back down, right? Look at that. 113 by the end of the week would be a 94. That's really not a great risk to reward. Let's see what weeklies look like. Let's see the 31st. The 31st would probably be a little better and safer. So where would be a realistic target if we could hit the top of this trend line, right? So that'd be 110, 110. So if we took, the 31st and took the 110s, those are 58 cents. Okay, you buy 5 of them for four for $200, and we hit 110 this week that's a double. Or you could take it on a trade up to 109. Isn't much. That's to the top of the supply zone right there. So we're gonna have to mark this level. Right there. So I would like to see, you could take weeklies. Actually, that's probably the better play. So we could take weeklies, shorter dated, take the 109s for 40 cents, or probably better yet, the 108s, right? And if you grab 4, that's 280. Or if you have a small account, you grab 2, that's 140. And if we hit 109 this week, which is this level, it's 109.60. We hit 109.20 by Friday, that's still 130%. 70% by Friday, but if it pops right away and moves, those will go fast. So this is not a bad idea to take a trade on this. Or what you could do is set up a longer term swing, which is what I'm more interested in. I wouldn't mind taking February 21st and grabbing the 115s for 1.5, right? And 115s for 1.5 because my target is 122.36 through earnings. If we hit the 122 through earnings, that's a 350, 390% play from here. All right, and you never know. They might break us out here into earnings, and then it's a good trade, and it's already done because you're up 100%. You can leave a runner. That's something I'm watching there. I'm looking at, where's my Roku? Where you at? So this one, this is my schematic on Roku. Accumulation. Okay, I'll pull up the map so you guys can see. It's A2, so it's this one. XOM. All right. Yeah, I like XO. I like energy. I like China. All right, so here we go. Pretty textbook to me. So this is my mapping that I have. Okay, it comes down, PSY shoots down, sets a low. This is SC right here. AR, there's the bottom of the range. Then it comes down, ST, shoots up, does a B1, comes back down. Here's the BST. It doesn't have to break range. This doesn't have to happen. And it shoots back up, aggressive, all the way to B2, right there. And then it comes down, and it's going through this, and this would be A2 right here. Shoots up, and this would be the test for me. Like, actually, the test would be right there. But this is LPSY, right? You can see how it shoots up, comes down right there, shoots up, and then here's the LPS right there. This last point of supply. So on this weekly, this looks good, like really good to me. The next move out of this has to break the range or get close to it. So that's why I alerted these, because, you know, another one. What's interesting is you have Disney, right, on the 5th, and there was news. Excuse me, there was news about this. I think like maybe an acquisition or some big partnership. I can't remember, and it really didn't react off of it. It was Fubo too. Fubo had news. Fubo ripped, went crazy. This one didn't really move. And I really like it here. I think this is a really good spot. You know, really, we want to see this thing on this week get up above this 76, let's just call it 77 level, right? This AR, we want to see it get above this level, and that would be ideal. Because if we can get above it and start to consolidate up into the pinch on this weekly chart, right? Here's the pinch. If we can get up into this level, coming into earnings, I'll swing through because I know this is going to rip, right? They could do that, or they could break it out on FOMC into the 100 and then leg it up through earnings. That could happen too. So I think that this is a great setup to look to long. All right. So Roku. XOM. You guys have a ticker you want me to look at? Let me know. Yeah, this is a beautiful setup. Very, very similar to Roku. In a pinch, uptrend held, very nice consolidation. Money's moving into it. You know, we've been talking about this since down in here, how it's going to get back up and go. They made it really challenging because they popped it, dropped it, chop, 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 and then they slowly let it out. But let's take a look at the volume here. I mean, it doesn't get better than this. A lot of selling, and boom, they just started buying the shit out of it. Yeah, 4-hour whales are in. I mean, this thing's going to see 118.75 this week, is my guess. Right? So 118.75 to 116.24 is a good target, right? That zone. They have earnings coming up as well. You think they're going to do bad on earnings? Probably not. This is the leader. This is the big dog in the house for energy. Yeah, I like that. We'll keep an eye on it. If we could get, all right, where would we enter? Let's think about this. Bearish divergence on the hourly. Okay, now we're going to take a look at the EMAs. Really nice crossover. So we would want to see a retest of 110. And that's where it would be a good spot to get in. We'll drop, hold, wick, and then we get in. There's the downtrend right there, or the uptrend right there. Take a look at the 4-hour. Yeah, I mean, this thing needs to take a breather. Yeah, it could get overextended, but if you look at the 4-hour RSI showing bearish divergence, I mean, this thing could even come down. Yeah, this thing could easily come down to 110. That's where I would be interested, VM, is right around the 110 level. And then if 110 breaks, then it's 108.80 coming up. That's the next spot. But it is a good setup. Just a little overextended. We would want to have gotten in down in here or off this tweezer on the 4-hour at 108 break. Then we could have caught a nice $4 move. But yeah, I do like that setup. So this stock has been getting a lot of call flow. Honestly, though, it's not my favorite setup. Yeah, I agree with that. Let's see here. Let's take a look quick. Yeah, yep. This little supply area. I see what you're looking at. Yep. Yeah. So maybe they gap it up and flush it. I don't know. That sounds good. Now let's go to Riot quick. Okay, so this is a perfect example of why you don't want to play too far out of the money on shorter dated contracts, right? Because even though IV is up, you got to be in the money. That's why the 12s, when we were alerting them down here, those are the best play. They're still cheap, and then when they go in the money, then they explode because the IV jumps them. But personally, for me, I like June $20 calls, and I like the March calls, March 15 or 20 max. Okay, I want to see this thing hit 20 by in the next 2 to 3 weeks, ideally. I want to see this thing hit 20. The $7 move, it can happen. It can happen for sure. Here's an uptrend here. I wouldn't mind seeing this thing come back into 1268, or it's going to come back down and hold 13, right? So your dips are going to get, in my opinion, the dips are going to get smaller, and smaller until the big breakout happens, right? That's how this shit works. We talk about this all the time, right? Let's just look at the daily here. Okay, look at the daily. Okay, shoots up, boom, comes down, consolidates, up, down. Okay, up, down. Now look what's happening. Now they kept it in this tight range, all this tight range. Now it's like, well, hold on a second. Let me get in, right? Let me get in. It's not up and then slam down. Like, this isn't a big move, and it got eaten up really fast. So this move here was 10 to 13. Then they brought it down to 11, and it got eaten up to 12 really fast. And then it exploded right up to 1340. Now it's coming back in. So we want to see it come back in, maybe test 1225. That'd be a spot right there. This doji, that's the 21. It's also a daily volume shelf, would be great. And then I think that's probably going to be it. Meaning, like, this is where it's going to probably, if it holds that, I mean, that's it. It's going to be the bottom for the short term, probably for the long term too. Because once they break this wick up here at 1580, it should be aggressive up here. Maybe come back, give it a retest, and then go. But I definitely expect it to do this on the weekly. I expect it to shoot up like this. And then fucking rip hard. Because if you look at what they did in the past, so they expect kind of like this up, hit the top, come down. It doesn't. It could do this too. Like, it could. Like, yeah. I mean, if you look at the past here, look at this. keep an open mind when you have multiple strikes and you have time. Keep that in mind because look at this move. Okay, it broke here's the range right here. It broke the range, consolidated. This is what I would expect off of the 20 to 23 level. This shit. 4 weeks in a row, just chop, right? And into a big flag, and then an explosion. Kaboom, all the way up and out. That's what I expect. And that's why I like the Junes. Because I want to capture the whole move. Because if I'm in June 20s and we pop to 20 and then it comes down to maybe 17, 16 and consolidates, I'll just keep adding and adding and adding. Because I know if it does what this did this time, and it did the same thing back here, it just loves to do this. This is a big move. And then, yeah, this one, and then, oh, they did a split. I can't look at that. I don't look at any price action if they did a split like after it or before it. So no split here, but it looks good. I mean, this thing could easily hit the weekly supply at $50. I mean, if you have the $20 calls for June and those go 30 into the money, this is the big trade. Okay, and CLSK has the same shit going on. Same shit. Very tight. Probably still in RS's discount range today on the weekly. Right? Where would be a good target? Look at this, 26 is supply. Once they break 20, it's gone. You know, and those 30s, I keep saying that why does the $37 calls for July have over 130,000 open interest and they've been loading them from here nonstop. Nonstop. Because if they do, they're expecting this move. They're expecting this move. Okay, you know, if this move happens, you know, July, I mean, that's all the way out till here. That's reasonable. Look at this move. From here, it was November 20th, and this thing ripped to January 20th. That's 3 months, right? What is that? Yeah, is that? No, so it was just November 20th. Yeah, so it'd be November, so it'd be December. 2 months. It's 2 months, really. Yeah, 2 months away. So 2 months puts us at March 20th, right? So if we get a move to say $37 by March 20th, and you have the July, I mean, my God, those things are going to go at least 1,500%. And then the same goes for Mara, right? This move to $79, $80. I mean, that didn't take long, right? Obviously, even this move, this consolidation in here, the thing that makes it interesting to me, and you're probably like, well, why are they taking so long? Well, maybe it's because they've been waiting and trying to get people out of their fucking shares through this chop, and they're waiting on some big catalyst for Bitcoin to extend it up and out. So now Trump's coming into office, could be the deal. Iron looks great, really good, really good. I like this setup here. All right, so that's the BTC stuff. Let me see here. Okay, so those are some top stocks to watch. Coinbase is in the same category. Don't need to really go over Coinbase, but it's literally in the same category. This is an interesting setup here. You have bad news, and it threw in a weekly dragonfly doji. Last week, it dropped down off the bad news. That's what it was. Dropped down and still in here. This is a really good setup. Look at the weekly here. Got the IHS. Setting up. This thing, I mean, I wouldn't be surprised if off earnings, it's up in here, this 46 level. So a lot of these things, a lot of these setups are kind of showing themselves into a breakout. Look at the daily. Yeah, it's coming back in a little consolidated. If we can get in here, yeah, right in the same zone at $39, it's not a bad spot to get into. Snow is in a similar, really nice pattern here. I wouldn't be surprised if this thing goes back up too. And they have earnings, end of the month. Nothing crazy. Palantir got a lot of put action up here after this big move up. So I wouldn't mind playing this to the downside. Okay, we'll see where it is, but this is just retesting this supply zone here. So it could come back into 210, 220. So we might play this downside. This would be fun. You get the RSI extended, a mean reversion to the signal line would be nice. This is an interesting setup here. They hit the March 705 or 750 calls, pretty heavy right here at $7. So this is the squeeze stock, a lot of volume on this weekly or daily, a lot. Look at the volume. It's all bullish. Even on the sell on this day, it wasn't even that bearish. So we want to keep an eye on this one too. This is a big flag. This thing could pop really fast. I want to keep an eye on this one as well. It's in a basically a trading zone right here. I like this area, but just keep an eye on it. Nothing, not like, oh my God, we got to be in this. It's more of China. Let's go to China quickly. Baidu is literally at the FV or the apex of this triangle. Like I said, and look what it's doing. It's flagging. So this dips on Monday. I'm fucking buying this. I mean, a dip on this hourly. Is going to be a buy for me every day of the week because I know as long as this hourly holds, 81.62, this thing's ripping, and it's not going to just go to $85. It's most likely going to go to the FV, which is the fair value of this triangle, which is right around 90. Think about that. You get in at 82 and this thing goes to 90. Oh my God. And we have Chinese New Year coming up. Whew, give me a Yosoi. I alerted the Babas. I think this is in a great spot. The flag held. Maybe the flag builds out more this week and gives us, something more like that into this zone down here, and then we can grab calls on this lower zone, or it breaks and holds, and then we grab calls, unless you're already in. Okay, so another one. Good setups, like bullish volume, bullish weeklies, bullish dailies. Like all this stuff is setting up really good. We talked about this for the last couple of weeks, how it's holding this really big trend line, fake breakdown, hold. Okay, this is PDD. This thing could get parabolic to the top of the range at 150. That's 50 points away, 156, right? They have earnings. Is that March? Wow, end of March. What? They don't have. I mean, it could just literally just shoot up into the earnings. Would be interesting. So PDD is going to be on watch. There's a lot of volume coming in here to move this thing strong off this trend line here. So this looks like daily reaccumulation down here, and it could be up getting ready to break out, which would be nice because there's a lot of gaps above. So we're gonna be watching flow. We're gonna be watching these very closely. Tiger, same thing. I just like the setup. I think it's in a good spot. A lot of shit going on over here. Let's take this. Let's move this over here. What's this one? It's kind of actually reacting to this trend line. So we'll leave that there, actually. Yeah. Yeah, it's reacting to a hidden trend line there. Oh, oh. So you can see how this is the trend line anchor, held, shot up to the top of the zone. Don't need this anymore. Then it came up and now it's rejecting it. Okay, so we want to see a break, reclaim, and then get up into this corner here at 750. The Baidu 140 calls for January 2026 have been getting a lot of volume, like a lot. All right, so now let's take a look. All right, let's start covering some other stuff. All right, so there's some top stocks to watch that I like. And Disney, Roku Coin, FSLR in AVGO. AVGO is getting a lot of volume on February calls. I'll probably do some live chatting tomorrow too. Chatting, charting, all that stuff. You guys want to vibe out on Monday if you have time. Okay, really nice. Anybody know what this looks like on the daily? I'll give you a clue. Anybody know what this looks like on the daily? Structure-wise. Nope, not a morning star. Anybody? Yeah, exactly. It's this pattern right here. The one exactly. Good job, man. Exactly this, right? You can see it. Here's the range. Another little Wyckoff EDU sash right here. Here's the range. Top of the zone. Let's make it the right color. Here's the bottom of the zone. Would be shoots down. No, actually, it would be whatever. It doesn't matter. It'd be this zone right here. That's a little too long. There, that's the zone. Bottom is green. This one slides over to here. Right there. Okay, that's the look. Right, so there you go. Here's your Wyckoff. PSY. Actually, this is not right. No, it is. Yeah, I had it right. Actually, that is. This is the breakdown. Breaks back up. B1 spring comes back down, tests, and then shoots up. This is a spring though. It's not. This is a D or A2. So this is a A1 setup, but it doesn't matter because we're in phase D, and this is all that matters. So let's draw it out. Very, very, very simple here. It shoots up, and what does it do? Pops up, comes down, pops up, comes down. Do this up, and then this wick you could say right here is the bottom, like that. So it's 1, 2, 3, 1, 2, 3, right? And this wick right here on the daily, so it did shoot up, it shot up, and then this wick came down. So you could count that as this last point. It's a 1, 2, 3, 4 there, and now we go. So this is going to be on the top of the list for weeklies and for February calls. Anybody have an idea what I said my target was back when we were here on this stock? I was pretty fucking far out there. It sounded, people probably thought I was crazy. 290 is my target on this stock. I said it before earnings. I said 290 is my actual target. That's why I was listing the 250s for March. So they're loading February calls. When do we have earnings? February 27th. Okay. We have Nvidia too. Nvidia has earnings coming up. They're the last of the mags. So we could see the extension out off Nvidia. Let's take a peek at Nvid. Oh, it's the 26th? Interesting. I didn't know they were that late this year. Wow. Okay. They're really late. Wow, that's late. Jesus. February 4th, Tesla next week, the 29th. So not this week, but the following week. So I want to see Tesla get like a little bit of a rug, and then we buy that dip. Or we get a pop, and then we're going to start to short it. But what's interesting is NVIDIA is so late. When is AMD? February 4th. Wow. Something's weird. This is not normal. It is not normal to have NVIDIA 20 days after the MAGs report. Don't you guys find that odd that they moved it back that much? I do. I find it very odd. It's very, very odd. So if they're hitting, all right, so let's think about this psychologically. If they're hitting Meta and Microsoft, they're hitting the Meta March calls way out of the money. They're hitting the February NVIDIA calls like crack, right? They're hitting, these are February 21st calls. They're hitting AVGO February calls. What's going to happen? What could happen? It's not even earnings related unless AMD says something so amazing that sends the whole chip sector. Anybody have an idea? Starts with a T. Trump. You know, these Biden's been, putting all these, I'm not talking politics, I'm just talking facts. Okay. But Biden's been putting all this shit, or the whole, the chip, whatever bullshit that like caused a big sell off, right? I forget what it is. So I want to keep an eye on this. I alerted some of these February calls on NVIDIA Friday for a swing, and even the June 250s. They're loading. I think it was the June 250s that I'm in. I can't remember. Let me take a look at the pro trade zone. Oh, I didn't alert it. I alerted the February 150s and 160s. I do love it because I think we're going to see this high retested. If that happens, those 60s go crazy. The schematic that Vince and I have on this is going to 165 roughly minimum, right? That's why I kept saying, like, so we want to really look to buy the dips on NVIDIA with time. Okay, even small accounts could get in cheap. AMD looks good here. It's been a kind of a tough stock to trade, but if this is the actual range, we're looking at, this is our setup right here. Whoops. This would be reaccumulation then. And this would be the spring that we just hit. SC, AR, ST. Well, actually, yeah, it would. This could be B1, B2 because it's on the daily. Comes back down. Let me see here. Yeah, that's right. This would be SCAR shoots up, B1, B2, spring, test, would be the lower zone here. If that's the case, then this thing's going to go back up. My target for this stock is right here in the short term. I think it hits it probably before or on earnings. So here's another one that's that to me, it's like you could buy February 21st 140s or even 150s, and you're probably going to get a nice move up to 130 before earnings, but then you probably might have to wait till earnings to get the pop. So it's a little higher risk, but still not a bad setup. All right. Okay, let's take a 2-minute break. I'm going to go get some more coffee and I'll be right back. And then we're going to cover entries and selecting the best option contract. We're going to talk about charting options. And then we're going to talk about the EMA and trendline strategy again. And I want to cover it in detail and I want to get some engagement. Then we're going to go over a special announcement that I have and then talk about psychology and being mentally stronger for the markets, because we need to be mentally strong because we have a huge next 2 weeks coming up. Huge. Next, 3 weeks really. You have FOMC, then we have FOMC, we have what else? Big tech earnings. We have Chinese New Year. We have a lot of stuff. So I'll be back in 2 minutes. I'm gonna get some coffee. So, one thing I do want to talk about is some contracts. Okay, so one thing I'm going to watch for is the Riot $19 calls for February had cluster blocks getting bought. It's kind of notable. If that volume sticks, that's going to be very, very telling that they're going to really want to move that. I also saw I also want to watch the $15 calls for February as well, 21st. The amount of volume on these is crazy. If they break 15, 16 bucks and it holds, this thing's going to go fast. So those might be a good trade. We'll keep an eye on that as well. All right. Let's get into how many people know. Does everybody know how to chart an option contract and understand how the option contracts move and where to know where to sell and where to buy your options? Throw a 2 in the chat if you want me to cover this. There's not a ton of people on stream, but there's a good handful. Okay. All right. One's enough. All right, let's do this. Let's change the stream over. Change my window. Okay, and then we're going to take this and move it over. Okay. So let's just pick a contract. Let's do options on. Anybody have a stock you want me to do, or you want me to do SPX, or do you want me to do Riot or something? We do SPX. Okay, perfect. So let's pick a strike that's going to have some volume on it, like that. If we're going to chart something, so let's take the 22nd, okay? Because all right. So how I have my stuff set up is I have the bid, the last price, the delta. It's important to me. Implied volatility, the ask, and then the volume. Whoops. There. Open interest and volume. Okay. I like this setup. For me, it works really good. So for me, when I'm setting up my option chart, I like to see open interest and volume right next to each other. I want to see that as primary. Then I also kind of keep an eye on the implied vol. I don't really care so much about the ask, right? But what I do care about is the last price in the bid. I don't care so much about the ask. I care about the last price in the bid when I'm looking to get in. You could even add this other point, which would be you could do. I don't really care about the mid that much. It'd be acid mid, and then here we go. High and low. I like to know this too. I have this on the side here. The high price on the low. Let's go to RORAT right now. Okay, you can see that on Friday, the high was 38 bucks on the 6,000s, and the low was 1140. Right? Pretty good volume. So these contracts were the ones that I alerted right here with the 50s. Okay. So let's do this. We'll chart this. These are the ones that I alerted because I have charting on it already. Okay. And let's take a look at the 5-minute. If you have any questions, stop me in my tracks. All right. So I charted this that night and it was, I think we were like consolidating. Yeah, here, this is right. Yeah. So it was down here. Oh, wow. It actually dropped down to 224 and then it popped up. So I didn't chart. So I had a low of 120. And then the reason why is just, this is the low on the chart. There's a double bottom. I don't know if you can see this. It's a double bottom. So I'm like, that's a good level. Okay. And then on the hourly, I'm looking at how I'm charting it. So I take the hourly of the option contract. Okay. I see, all right, a tap here, and kind of a tap in this zone and a tap there. And then they retested it. What was this today? Oh no, this was before. So yeah, so really these contracts were drawn out based on this line, these lines, this line, this line, these line, and then looking to the left, what? Well, that was the only data I had, I guess, on these. So you can see that there's not a lot of candles. So when you do this, when you chart it out, you have to look at the hourly, and you're just looking at stuff like this. You're just looking at things like this. Candle close here, candle close there. That's a pretty good level. Okay, double candle close on the hourly. Okay, it came up, rejected there. That's pretty important. This could be a level 2, absolutely. Right there. And what I'm looking at here is this wick down here, this reversal wick, and these candle closings in this area. So that's an area. Then you can look at this as a spot too, this 274. Yeah, that's definitely a spot. It's a big support level. So I like this as a support. And then what I'm going to do is I'm going to change these colors if I'm going to trade this, which is most likely what's going to happen unless the market gets flushed. And then I'm going to change these colors because these would be my mid-ranges. And then I'm going to say this 8.5 is going to be more of a breakout level. And so is this one. So I would be looking to buy off the green, right? This would be a great spot to buy. Like if they wick it down, or even if this 550 level holds, that's a possibility too. But with theta, maybe Tuesday these things open up at 282 or even 120, and then you can look to trade these. Obviously on Tuesday, this is going to be the expiration, so these things could get rinsed. But when I'm charting it, I'm looking at the hourly, and I'm looking at multiple taps, and that's what I'm looking for. Multiple taps, I draw the line off it. Multiple taps here and multiple taps here gives me stronger levels of confluence. Double bottom, find the bottom of the range. Now, as I'm going up, right, I'm going to look for a tap here, okay, and a tap here. That's a decent zone, okay? And then same thing here, tap there, tap here, and then we move over. Actually, this needs to move down. So this one can stay here, actually, because you got this candle close and this candle close. And you have tap here and tap here. So that's how I'm drawing it off the hours. I'm looking at those really candle close. The more taps and candle closes, the stronger the level will be, right? And then once you break this range up in here at 14-ish, right? Let's say 14, let me see here. Actually, really, once it breaks 1279, and then the above level of that is, yeah, 1395. This is going to trigger the move up fast. So once it breaks this zone, it could shoot really fast, and that's probably when these the market would shoot up and put it up like in the money or close to the money. So, but what's interesting is look at this on the hourly. Look at that. You have a reversal candle. This is an evening star reversal. So now it's reversing back down and we're on trend, right? So looking at structure, when you buy, so how I like to do this is same as Vince, is, okay, we're here. Okay, then we're looking at the market structure. The market structure looks good. Great, awesome. Where am I going to buy and why did I alert these contracts? Well, first of all, I knew that if we had a true breakout to SOS above range, that we didn't need to get close to the money. So I wanted to buy time so that the theta and the decay wouldn't cook it because it's Friday, right? So we got Tuesday. And they were cheap enough to where if we did get a really big move out of the zone, it would get to 6,000. And if we did get to 6,000, these things would go crazy. Right? Easily double, which is double is a great trade on 3DTE, so we alerted right here that night, off this level, this level right here. Let's go to the 5 now. Because I trade off the 5, the hour, on the contracts, that is. Okay, so it shot down. I alerted them right in the zone, right here. And then they popped up, down. I went to bed. Right? I didn't see this move down here. Otherwise, I would have really loaded up. Right? And why would I load up? Because I'm bullish on the structure, right? I'm bullish on the market. Right? I'm bullish on what I'm seeing. So I don't need to get stopped out here, right? And if I look back to the left, this is probably a level. It is. You can see here, that's a level right there. Let me just double check here. Yeah, you have multiple consolidation taps on the 5 on this level. You can even raise it up a little bit. Oh, whoops, what are you doing? All right, there we go. So if I take this and I raise it up to the bottom, see where they bounce it? Yeah, you have, it's hard to see. Let me zoom in. Really hard to see there because these candles are so damn small. Okay, where did they bounce it? Let's get it to precise there. A tap here and a tap here, and now another tap. And then what happened? Look at this. They gapped the fucking thing. You want to see something cool? They gapped it into the London Open. Right? So right at the London Open, so coming into it, so people are like, oh my God, calls. And then if they stayed up, they're like, oh fuck, they're sweating, right? But look what happens. This happens a lot overnight. They rinse it right at the last moment, and then they start to rip it. And then the London Open happens, and then they chop people up. And then they drop it down. So this was a test of 59.60 right in here. And then it consolidated, dropped down to support. So then again, there's no reason to really get stopped out here. I want to sleep. I just want to take a nap. That's all right. He'll tire himself out. All right, so comes back down, tests it, and holds. So if you bought calls here or here on the alert, right, in this area, and you're like, man, shit, it's down. You have to stop the emotions in this tracks instantaneously. You have to think to yourself, okay, hold on, before I stop out, where's the support on the contract chart? Number 1. Number 2, where is the market at? Where are the big pivots that I like to pay attention to, I need to pay attention to, okay? And if it's holding that, you do not need to get out. You should hold it, because then you also have to think in the back of your head, okay, what time is it? Are we coming close to an hourly change? I've been saying this since day 1. Hourly change, 10 minutes. Hourly change, 5 minutes. Hourly change, hourly change. There's a reason why I say that. Because you're going to get reversals. Nismo's talking about it all the time in chat. Doing reversal. It's every hour reversals. So, there's more powerful reversals than others. There's more powerful times than others. The 2 p.m. algo, the noon reversal, power hour, and then the 10 a.m. reversal. That's a big one. And then you have the 7 a.m. Is it 7? 3? 6 a.m. Eastern reversal. Then you have the London Open reversal. There's different reversal times that you see in the market. So the more you pay attention to that, the more you'll pick up on it. Okay, so you buy off here, and then you're like, oh my God, shit. Okay, well, you know what? I'm looking at my structure. It looks good. And you know what? We got an hourly reversal coming up at the London. Comes down, holds, it pops. Now you're back in the range. don't sell. Why? Because you're holding. Then it comes down, you're freaking out a little. It's still holding this support range right here. Fine, hold. And now you start to get the move. Coming up, it's there stepping its way out on the contract chart. Shoots up, comes down, then shoots up and starts ripping. Then the market opens. Right here? No. This is before the market opens. Yeah. Comes down, tests the support again. And this is a strong flag here on the contract chart. And it breaks out. The market doesn't just go up, 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 up. Sometimes it does, like on Trump coin, but typically it'll go up, test the supply, come back down, test the demand zone of the option, and then it will get going again, right? If it's a true breakout. Now, if you're in these from $2 to $3, right, and you get this move, you can sell. That's a great move. You just turned $300 into $1,000 almost, right? And then if you want, you can say, I'll wait. And then if it holds this support level on the contract chart, I'll buy. So it wicks down and you didn't catch it, but you get in at 620 and you hold. Now, look at the high, $1,300. You didn't really have to do anything. You didn't even have to look at you knew the structure was good. You knew that I had alerted a call, right? And overnight calls, I don't really alert there very often. So my hit rate is pretty high on them. So that's how you really want to look at the option chart. It's another layer of confluence that helps you. Yeah, and it happens, man. And that's why I want to go over this stuff is like, because, instead of looking at the candles and freaking out or getting stopped out or like, at sometimes you just got to say to yourself, where are my facts? 33 cells just listed calls, and he didn't even stop out. List the stop out if I do. Second point is, with the schematic that Vince and I talked about in that night before, and then he posted it, is bullish too, right? So then you have to think in your head, in the moment, are my emotions valid for me to feel this way? Yep. But I alerted the 60/50s. So I alerted them 100 out of the money with time. So when I do that, which I don't do very often, that is got to tell you that I have conviction for a move up a substantial amount. Let's go to those options here now. Let's go to the 61s for the same one time that OG was in. So I'm just trying to show y'all, so he got in at 50. He had a great entry. So you mentally, OG, you should be thinking this right now as a trade recap. You should think in your head, fuck yeah, I got a fucking great entry. That's step one, right? So you should give yourself a pat on the back and not talk shit to yourself or talk down to yourself or whatever it is that certain people do. Everybody's done it in the past, but the point is we can't do that because you have to fill up your bucket, right? You have to fill up your bucket. You don't empty it out. Filling up your bucket is looking at the trade that you did not succeed in and seeing the things that you did good in. And then saying, man, that was good. I did a good entry. You got in at 50 cents, right? That's pretty fucking good, right? And then it pops up. You got shaken out. It's fine. You didn't take a big loss. Not a big deal. And it comes up and it back tests. And look at this. Same shit. All these levels apply. OG could have taken it to 2, right? Before open, sold, and he would have been done. 50 to $200. That would have been a nice trade. Right? It didn't go much higher, right? It went to 250, but here's a perfect example. It came all the way back down to 86 cents. When you see this big, big, big move, right? Level over here. This is you gotta be selling this shit. Don't be holding for hope. Okay? Because the market didn't even move that aggressive sorry, didn't move that far, but it moved aggressive. And so you got to sell into that strength because the premiums on the IVs are juicy. When you play pre-market, very, very important. Everything is really expensive the night before and the morning of in early pre-market after the London. Okay, everything's expensive. Why? Why is that? It's because there is still 6 hours, 5 to 6 hours till the market opens. And the theta and time, it has to go through that time process to decay, right? So when you see an alert that's cheap, like under $300 pre-market with time, that's good. That's really good because if you get a move in pre-market and then into the open, oh my God, they go crazy because during the market, peak IV is at the open, right? And then IV dies. And then you have to get the move to jump the market, to jump those contracts. Does that make sense? Perfect. So now, as you recap in your head, and I want everybody to think about this, as you recap in your head about your trades and what you did good and what you did bad, it's not so much like, oh yeah, I fucking made money. Great, awesome. That's not so much where winners are made. Winners are made in the market, or in life, in how they break down their losses, right? Like it's how you handle mentally your losses or your losing streak or your winning streak. It's not the actual loss that happened. It's not the actual win. It has nothing to do with it. If you guys can think about it like the bucket, right? And Conor McGregor is a mental giant. Like the guy is a G, right? You know, lived off food stamps and then became a billionaire. Well, he didn't become a billionaire just because he trained in jiu-jitsu and became really good. Or sorry, jiu-jitsu and MMA. That's not why. It's because of his mindset. Do you think if Conor McGregor was on food stamps training for MMA and he's like, man, I just got my ass beat. I'm that guy. Fuck, I suck. Oh, here we go again. Well, this is my luck. You think that dude would be where he is today? Fuck, no. No, absolutely not. No. What he did was when he did lose, he would go back and play the whole match back in his head. And he would see himself executing properly. And then he wouldn't beat himself up, he'd lift himself up. He'd lift himself up. He would talk to himself and he'd visualize himself succeeding and saying, you know what? It's all right. Next time I got that, I'm going to take that guy down. And when I improve and this area of my skills, I got it. I can't wait to crush that guy's soul. That's how he thinks. Right? That's how all winners think. I think not necessarily crush your soul, but like in general, as a fighter, you're thinking that, right? And as a trader, you want to be thinking these types of things after you're in the trade. And, you need to understand your limits. Yeah, you need to understand your limits. Like everybody has a limit. Maybe your limit is, I only make 33K a week and I cannot break 33K. Okay, well, why is that? Okay, well, maybe it's simply because you just keep thinking about the fucking number, right? It could be that. And then you mentally get there, and then your behaviors and how you trade or how you think, how you navigate change. So, the mental psychology of yourself as a trader and as a human being is like the only thing that fucking matters in life. Like you see Vince post, "Oh, we're in the Matrix." It's with the fucking Matrix. You're right. But you have to understand your own brain, your own mind, so that when you're in the moment and you're looking at the market, you're thinking to yourself, okay, what is my process? what are the habits that I need to change today in this moment? Oh, 33 just dropped an alert. What do I need to do? It's not, oh, just slam the fucking calls. No. I want you to go through the process, because if I throw an alert, right, and my entry is a starter position, and that entry goes down 15%, I'm probably going to be looking to add if it's on support, on another support level. If everything looks good, I'll add more, right? Or maybe I throw out the alert, right? And then I'm like, hold on, guys, I'm going to wait on this. So the alert's sitting out there. And then we can wait to maybe get in cheaper, right? So, but we always want to be thinking about our mindset and how we approach our entries. Okay? If you get excited and feel, because there's a lot of rooms that do this, they like throw the alert and then everybody rushes in. And then like 80% of the people get fucking bagged. Okay? 90% get fucking bagged on that. Because then what happens? The stock price kind of chops around. Maybe they get the move and they get 20, 30%, or it rips and they make 100%. Great. But a lot of times when you see alert, boom, you know, a lot of these, this fucking reverses unless you bottom ticket. And, you know, a lot of great trades go red before they go green. And so when you enter into a trade, are you thinking in your head, or are you just blindly slapping it? If you're blindly slapping something, you're at the mercy of the market. And what we want to do is we want to be in control of our entry. Not only, obviously, I'm going to do my absolute best to give us the best possible entries. Okay. But then also, if you have a small account, right, and we're going to do this, I'm going to have a special announcement here in a little bit. But if you, for yourself, if you're liking a ticker, what are you looking at? You know, go through the process. Okay, we're in a bull flag here. All right, on the 15-minute on BTC. Right? Okay, all right, I could buy this. I like the reversal setup. What's the structure looking at? We're holding the 15-minute EMAs. We're in the structure. This thing could pop to 105, 138, and then get rejected, or it could extend out and we make a new high into the afternoon. Right? That's the way you want to think. So what do? Hey, we're going to buy calls here right now. It's breaking out, but you know what? If it comes back down to the hourly or the 15-minute 21 and holds this level, I'll still get in because there's bull flags here and it looks like it's going to go. So we get into BTC here, and then now we're starting to go. And as BTC starts to move and break out, we handle the trade. Now we're in the trade. Okay. Now now it shoots up and we get out of the trade. You need to be thinking, fuck yeah, good trade. That felt good. What did I do good? Well, I had a good thesis. I looked at everything's right. Okay, now let's say if it goes bad. Okay, now we get in, and they rug us down, right? It's down to the back of the supply. And then you stop out under the doji because that's where you planned your stop, right? So you take a little loss. How are you handling that loss? Are you saying, fuck, damn it, I fucked up again, shit. Damn it, I'm the worst trader. Fuck, this always happens to me. Shit. Or are you thinking, all right, that's it, I'm done for the day. I'm done. I'm done trading for the day. Or are you thinking like, oh man, I'm gonna hold. Oh shit, I'm stopping out. And then bounces. Right? You know, that happens a lot. Holding for hope. You have your stop here, you get stopped out, it comes down here, you're like, all right, well, it's building structure, let me buy calls again. And then it stair steps up and up, and now you made a great trade, right? It was actually two great trades because, first of all, you don't need to be getting FOMO on anything, right? Sometimes I alert stuff that's not in the greatest spot. I'm human, but I try to do my best to get the best entries for everybody. But, you know, I just want to make sure like everybody, because taking losses is just a part of it. There's no traders out there that don't take losses. They just don't. Everybody has to, you know, and when you accept that and you understand it's part of the game, well, at that point, you can start to accept your losses and not get emotional about them. You know what? It sucks when you lose money. It really does, because you're trying to grow and you're trying to build a portfolio. You're trying to build your life or whatever your goals are, and it sucks. However, you really have to give yourself a pat on the back when you stop out right. When you set up to your trade plan and you stop out for 5%, small accounts should not be holding for more than maximum 10% loss. You should be getting the fuck out. Okay? Smaller accounts is in a challenging situation because you cannot afford to lose. You have to get into a trade, and like I said, most trades go slightly red before they go green. Well, for you guys, you need the fucking trade to go green. So what does that mean? That means your entry has got to be damn near perfect. Okay? And that's a good thing, because then it forces you to be more patient. Now look at this. Look what BTC is doing. We're in this trade right here, and it's breaking out. Now we're green. Okay, now we're watching to see, what are we watching here? We're watching this wick here, here, here. We're at resistance. Okay, so we're in this trade, we're in BTC, and we're looking for a break, right? A break of the bull flag. That was our thesis. We know our stop is, it's under this doji. Okay, so we don't need to freak out. We're chilling. Right, so now we're up $70 on BTC. Okay, now now back to what I was talking about is, yeah, understanding, like, hey, I only got $700 to trade. So what is my goal today? If I made $70, that'd be a hell of a fucking day. Hell of a day. 10% of my port, right? It's a good day. Okay. If you make 100% of your port, that's amazing. But be realistic with your profit. If you're only risking $200 of your port, which is more than 20%, it's 25% of your portfolio, which is a lot. I only recommend risking, it's tough because when you got such a small port, you need the contracts to be able to go, and you can't, it's a tough situation, because you can't just go and buy a 20-cent contract or $20 contract or $30 contract and be like, man, I need this to go to $100. Like, it may only go to 50 cents. And the further out of the money you go, the more risk you have. That's why I was begging you guys to take the Mara $22.50 calls for 2 weeks out, because I'm like, whoa, this is an A+ setup. Broke the downtrend. This thing had a lot of volume. There was multiple blocks loaded earlier in the week, and they were only $34 at that time. And I knew where it could go. So those don't come along very often, but they will be coming along. And you really have to do your absolute best to forget the fucking alerts, right? Forget them. You have a smaller account under $1,000. You do not need to be paying attention to any of the alerts. And if I say, hey, small accounts, I really like this one and it has time, don't go out and buy fucking $25 calls on Mara when I alert the 22.5s. Do not do that. Okay. I'm picking the strike for you for a reason. I'm picking the strike for me for a reason. They fucking move. 25, they didn't fucking move. Barely. So it's like, what are you going to do? Buy, 5 of the 25s for, 15 cents and get a move to 20 cents, 22 cents, right? Or are you going to buy 2 of the 22.5s at 34 cents and get a move to $1.10, right? Like, you know what I mean? Like, the risk reward just doesn't make sense. And that's just simply the way the deltas work, right? And so that's why you got to be intelligent and be thinking about your strike and why I'm alerting that strike. And if you have a small account and you see me alert MSTR and those contracts are under $350, I would highly consider taking it. Highly. Okay. And same with coin. right? You see me alert coin MSTR this week or next week, and those contracts are under $350 a piece, 3.50. I would definitely spam the chat and say, hey, is this a good one for me in smalls? Because it most likely will. Okay? Because you could get a flick of 5-10 points up in a flash, and those things are a double. Right? And that's what we want. And if you get a $200-300 contract and you have a $700 account, you better fucking know exactly where your stop is at. And if you don't, you better ask. Ask me. Where's my stop on these? Where is it at? Is it here? Is it on this spot, or that spot? Okay. Now, that's the way you got to do it, right? So, anybody have any questions about this? Okay. Most likely, I'm expecting a gap up on BTC shit on Tuesday, and then they're gonna fucking pull her back down. Most likely is the plan. It'd be interesting too. To see what look at this move. This is unreal. 55. I mean, what a move. It gapped. Why did it gap up? Does anybody know? Okay. Anyways, so let's talk about an EMA strategy. Everybody familiar with trend lines, or sorry, the EMA strategy? Put a 2 in the chat if you want me to cover it. This is a very basic and easy way for you guys to understand momentum and what stocks you should be trading. Okay. Very basic. All right. Here is the hourly. Is this a type of stock you really want to be trading? To the upside or the downside? No, not really. Yeah, a little pop here is fine. On zeros, it's fine. But, I mean, look at these EMAs. They're flat. They're not moving. Just consolidating. Now let's look at US 500. Look at this move. Okay, so you're not really trying to sell or take puts of anything unless you get an overextension into a big level. The level we didn't hit my spot that I wanted, but it did revert. Okay. Excuse me. So, you know what? Let's take a ticker because we can do this. This is fine. All right. So, EMA strategy. This is probably one of my favorite ways to trade, especially buying time and learning how to grow an account. Learning how to grow an account with this strategy is very, very easy. And it teaches you patience, number one, and it teaches you to look at what pays. Okay, looking at what pays is everything. You have a downtrend here, right? And as soon as the EMAs go from a downtrend to an uptrend and you get a crossover on the 13 to the 21, you better start paying attention. Then you draw your trend line. Here's your trend line. Here's the first rejection, back test, hold, breaks down under it, reclaims, and then the EMAs are still crossed and tight. You can take calls here, right? But obviously this is a gap up, but ideally you wait. You could have waited in pre-market until it broke 80. Once it broke this spot, you can take calls. Why 80? Because right here. That's a confirmation of more upside to come. Right there. So you made in a downtrend. It breaks the downtrend, comes back down, breaks under, fake breakdown, then reclaims and holds. This candle, you can start playing calls all day. Okay, and this is the hourly. Then once you get a crossover, you don't look to play puts. Okay, you never do. I mean, intraday, maybe scalps, yeah. But really, you're looking to buy dips. Why? Because you have a crossover on the indices. The EMAs are in a beautiful uptrend. You have this crossover over the 200, and that's just an ABC setup, like A plus. So it comes down, sets the range, and you can see this wick, and you can buy calls risking this low. Ride them up, sell. Yeah. Shit, don't tell me I'm fucking muted. Oh no, I'm not. Yeah, it is. Yep. So this is the 1 hour. Yep. So I like to trade. I personally like to, if I'm going to buy into a stock, I might want to make sure the 1 hour is perfect. No, I know. Really? No, the EMA here is flat, but we're not playing that. So here's the deal. I'll show you. You could say, yeah, they're flat here for sure. But it's in an uptrend. Right there. That's an uptrend, right? So if you're buying here, right? So that's the thing is, hold on here. Let's take a look at what I just showed. Not fucking with this. Why? It's in an uptrend. You could buy calls, right? But it's a scalp because because look at this. Here. And this is the mid range, right? We're right in the middle. So if this is in the middle, right, of this range, you're scalping. And the EMAs are in an uptrend and they're flat in the mid range. That's why in this chart, okay, EMAs are in a downtrend. Right here. Then when you have your trend line, now you know the downtrend's broken on the shorter time frames. Break it out, big breakdown, comes back, retests it, and it holds. Now you could take a swing on a calls. It's a little higher risk, targeting what area? 200. When you have an uptrend on the EMAs, okay, and you're on support right here, you can target the 200 on the daily, or sorry, on the hourly, okay, always. And the cool thing about this is you have the resistances here and here, and you know that if that breaks, this trend line strategy is going to explode it. Why is that? Does anybody know why we know for a fact that when this wick in this top breaks, it's going to explode regardless of data? Anybody know? You can say it on live. I'm trying to get a little more interaction from y'all. Dad, why is this setup going to fucking explode right here? And you know it. Why?
$33 winter here.
Hey, what's up, dude?
Hey, buddy. Just momentum in that direction, and we're above the EMAs.
What else do you see?
We broke resistance, right? And we're in a rising wedge.
Well, I'm saying, how do you know right here that you have a high probability of hitting this spot? And if that spot breaks, we explode.
Because price is compressed.
Exactly. Fuck yes. Exactly. And what is this structure here? An ascending triangle.
Ascending, right? A rising wedge. Yep.
And what is price doing? It's the tube of toothpaste, right? This is the tube right here. There's your tube. And this is the toothpaste.
Okay.
Down, up, and then what's happening?
Compress. Load like a spring loading up.
Exactly. Yeah. Right?
Yeah.
So when you guys are like even like large or small doesn't matter, but mainly for the smaller accounts, and we get into a trade, look at this shit. This is what pays. It's not your fear or your greed or how much. This is what pays. Identifying and look at how did we figure this out, right? And this applies to all these shit. Like we could go to hundreds of stocks and the same fucking shit happens. Okay, we don't even have to be in this. This price doesn't even have to, like, none of this exists, right? Okay, but we know it's going to do that, right? Because we have the structure built, and here's a low, here's a higher low, and then here's another higher low. Okay, you could buy time, right, out of the money, and your stop would be a break here, right there on that trend line. That's all. That's a pretty good risk to reward. You're at 60 or 58.40, and your stop is at 58.35 or 25, right? That's fucking pretty good if you buy 2 weeks out on SPY calls. Out of the money, you could go. So I just want you guys to understand, like, this is an EMA strategy, a compression EMA strategy. I fucking crush this strategy. It's my bitch. I've been doing this for this strategy. I've been using all the fucking time for years on swing trades. And what I did was I'd always, my goal was to try to get on a typical stock a $5 to $10 move within 2 to 3 days or a week, really fucking fast, and catch the timing of it, right? And I buy a month out or 2 months out contracts, and they go 100% or 50%, and that's a great trade. And I just keep doing over and over again, right? And then you think about it, you throw in the confluence of being able to read the option chains and understanding, like, when the whales are in, when they're not in, or, hold on, they're holding these. I like this. It gives me an extra layer of conviction, right? And these are basic stuff, right? So we're looking downtrend here. We don't fuck with calls. Okay, now we're paying attention. Okay, we don't care that we missed the move. And we got our downtrend defined. Okay, back test. All right, reclaim. All right, now I got my structure defined, right? I got this wick here, these wicks here, and down here. Now I got my thing. Okay, all right. You know what? I'll take some calls here. You sure as hell ain't taking fucking puts, right? So that's the way I want you guys to start thinking about stuff. And if you see a stock and you're like, whoa, this looks good, I'd love for you guys to be like posting like, oh shit, this looks like this, right? Then we'll take it 100%. But when I alert a stock too, let's take a look at MSTR. Actually, before I do that, I'm gonna do something quick here. I'm gonna see if something lines up. There's a trend. When's that? Tuesday, the 21st. Okay, look at this. So Wednesday, the 22nd. Yeah, interesting enough, this support trend line lines up right there. So futures are going to open up Monday, and they could just kind of ping pong through, and then let's see where we open up. This is because this is the same shit, right? Right. This hourly EMA is going to come over here, and look at that. It's Tuesday, right? Right around opens right here. That's like open. So if price kind of does this, maybe we catch this back test and take it to the top of the range. So we're looking at that, and it's the same principles. Because if this 200 is supportive now, and price is here, and these EMAs are now flat, right? And they're riding like this, and price, the 200's here, and then price comes back down, and let's say it wicks under and tests this level here. Oh no, it's not going to go down there. No fucking way. But if it is down here and the 200 is rising, and these what do you call it? The 13 and the hourly 21 are coming into it, and price holds this level. It's gonna make a fast move up. Watch, this shit's gonna happen. I could see that happening very, very, very easily. So what I'm saying is again, as pre-market happens the next 2 days, I could see the open on Tuesday, this 200 rising into here. No, it's not there. It's like right there. This would be the open Tuesday. The price could do this. And then go down and fucking rip. That'd be wild. Right? Or vice versa. Could come in here. Open up. And then fucking dump. And then reaccumulate on the 15. Right? And then distribute back down and then fucking go. Right? Looks like the 4 hour. 1, 2, 3, 4, boom. See how that all fits? That's a possibility. But the point is on the EMA strat, you're looking for the compression. You're looking to see where you can define the compression. It's these big wicks over here on this time frame. Right? This is a big wick. That's a big rejection. Boom. Right? And then that sets a low range and gives a big reaction. So this is a big spot. And then they rejected here. So this is a big point of where you want to be looking for a breakout above. It happened. I bet you it happened on MSTR. Let's just take a look. I didn't trade it like that, but I bet you it did. Here's the hourly on MSTR in the EMAs. Now look, let's take a look at this on the hourly. Downtrend. We don't buy calls here. Okay. Uptrend. And what happened? Flag on the hourly. And let me just say fucking thing happened. Look at this. Let's draw our structure. Right? Here's our structure, the low. Here's another wick. We got that wick. Okay. Excuse me. There's our structure there. It wasn't there though, because price action wasn't there. Excuse me. You could say this. This is the structure right there. So we have this wick in the downtrend, and this is the big rejection here. Okay, and then we have our low. You have a wick here and a wick here. So now your tube is built. Okay, so you could target from here 116 to where? Top of the zone, right? And we know when it breaks out, 90% of the time it back tests and holds, or it comes back down, holds, and then breaks. All right, so check this out. Same shit. Structure, toothpaste of the two, compresses, breaks out, retests. You buy that shit all day. Look at this move. You buy here. If you're late, you get in at 34 and boom, catch the move to 53. Because this candle goes up, closes here, and then opens here and rips before it sells. Now let's take a look at the EMAs and how it fit into all this. Downtrend, extension down into support, pops up, builds structure. Now EMAs cross over right here. They crossed over here at 25. And where's your target? If you get in, 200. Always go to the 200. Now we've crossed over, and what's happening here? Same shit. Compression. It's compressing. Right? It's compressing into this. And boom. Your risk is very simple, and you know it's going to pop because EMAs crossing over the 200. That's supportive. Price loves on the hourly, when you get momentum behind it, price loves to compress, pop, come back into the 21, and then just ride it. Like, that's what it does. Like, look at this one. Retest and boom, tweezer bottom and held. It did stay under the 21 for more than an hour. Hour, close, up, buy, retest, see ya, and then look. You could have bought here. Right here. You could have bought at 30 or 332, the retest, or you could have bought here on the crossover at 37 and said, I'm going to buy next week 400s. Right? We alerted them. They went 100% on this move up. That was fun. You held them for 1%. We alerted them. You can check the channel. They're $600. All right. There's another example of the EMA strategy in compression. All right, and then, so now we're going to do the same thing here. Now when we have structure built, trend line, right into there. Now we can see what's going to happen. Okay, well, come on, give us a Yosoi to the gap fill, or maybe a half gap fill, and then compress again into this resistance and give us the big move, right? So we can see how this, I need to log off. Will this be saved? Yes. Excuse me. So right, now let's talk about, does everybody understand how that works and what they're looking for? Throw a GIF in the chat if you do. All right. We're gonna keep going over this, so if you forget, it's like not a big deal. Or you could just refer to the video. Like, you know what I mean? It's a fun one. I love this strategy. It's so powerful. And you know what the coolest part is you don't have to be perfect. You just have to, and it teaches patience. It teaches this like level of patience that makes your mind think about what you're trying to do as a trader. Here's NQ. Nice. I like that one. Downtrend. Okay, now we have an uptrend. Okay, here's an uptrend here. Okay, compression right there. All right, well, if I'm down here and we're near support, I'd rather buy calls here than up here. I don't want to be selling them up here, right? What's my risk here? Oh, it's just like very, very, very tight. You could buy a month out calls on SPY right here, and your stop is like, it's not there. That's so sloppy. Your stop is really a close under this level. So that's what, 150 points? That's like not even a point on QQQ, right? So you're looking at this and you have to think about the risk to reward. And yeah, it's hard because you know what? We thought this was an M. Boom. But it wasn't, right? And actually, if you looked at the EMA strategy, it was telling you we're going up. And that's where Vince and I made an error on upside for that time, was because we were looking at an M when actually we should have been looking more closely to the structures, which he mentioned too. And the EMA strat tells you about the structure. It's changing, right? Look at this. This is a downtrend. Clearly, there's nothing in the structure that says it's going up. But this is a complete change in structure right here. This box. Complete change. Like here, nobody's buying calls here for this move. Nuh-uh. You buy calls here, right? Because you can't buy calls here because it could still do this. Makes sense. This is doing this. It could have done that. Right? But what happened here? It went from here, here, and then it went up, and then there, and then in resistance. Or see what I'm saying? So it's like this tells the story up, a higher low, right? And then we could target, because we have tight risk, target the top of the zone. And if we get a break, boom. Because looking back left, it's been doing that. Right? Same thing. Down, up, wait, you're not buying here. You wait, comes down, hold structure. Okay, now you can buy. And then you look to sell. Okay, because you get the crossover. And then once you have this crossover on the 200, on the 13, you're going to get continuation down because price is getting compressed by the EMAs. And you can see it very, 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 very clear. Let's talk about bullshit. Let's talk about the compression. When you get price above, it rides it, likes to ride it. When it breaks down, it likes to get compressed underneath. Rejection, 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 rejection. Right? Up, hold, rejection, false breakdown, structure's changing. Hold, ride it, hold, ride, hold, breakdown. You staying away. Up, flag, reclaim, hold, boost. See? Because it's in an uptrend here too. Here's your low, higher low, there, stair stepping. So we're just stair stepping through this process. Right? What does the stair step look like? Up, down, here, up, here, shoots up, here, shoots up, here, shoots up, here. Now it's changing. So you stand off, right? Now it went back up and hold, right? Now it's changed. It's holding this level. So it was a fake breakdown, and you can take calls off that to shoot it up, which we did, right? So, and you can also say, okay, what else is happening? EMAs, downtrend, crossover, no calls, maybe calls, okay, calls. Now what's happening with EMAs? They shoot up, and all it's doing is the EMAs are giving a kiss to the 200. They kind of hit into the 200, and as soon as you see this little, it's like a cushion hitting the pillow and bouncing, right? Just like, well, here it didn't. Here it broke and crossed over. But the moment you know it's curling and it holds, you can take calls. Now here the question is, it's interesting, is we're up here at resistance. Is this a false breakout? Or is it going to simply do the same thing as in here? Is it going to come back in, retest this, right? And then get another leg up, right? And then we get the EMAs going like this. And this 200 would be like this. And then the price is supportive of it, right? Or the same shit's going to happen from over here. EMAs flatten out. Okay, price consolidates, starts dropping underneath, weakening. We get a UTAD, and then it fucking starts dumping. And then we come all the way back down again. Okay? I don't think that's going to happen, but we'll see. All right, so there's the EMA strategy. Well, our Bitcoin trade is doing really good. Okay, we are up $300 on our Bitcoin trade that we took earlier today, right? So here's the 15-minute. Okay, here is the bull flag that we looked at on the 15 that we just talked about live. There's the bull flag or falling wedge, whatever you want to call it. And where did I say this extension is going to go? It'll break out. Right? It'll break out here. Right? So I'm playing technicals, right? I'm looking at the 15-minute bull flag. And what do? We got in because of the doji, right? And it was supportive, and it was breaking the downtrend. Right? So this is the downtrend. Let's take a look at the 5 to tighten up our trend lines. So there's the top. Here's the top. There's the trend. It broke. We got calls. Okay. And now it came up, stair step down. We're not getting out. We don't need to get out here. We're chilling. Okay. And then it pushes. Now we're up 310 bucks. So, we'd probably want to scale a little bit and trim here, right? And then we'll leave some runners. And then for the breakout, right? So we're trimming here, right? We don't need to be messing around too much. RSI is getting in the kitchen, ceiling, so we'll chill, but we'll let some runners. And where's our stop going to be? Okay, our stop is going to be a break under, probably break even, actually, just under break even, because we got in here at 105.40, I believe, right? So we'll probably put our stop at a break under 105.100. So 105.90. That's our stop, right? So we stop just above break even. And if this goes, it goes. If not, we're already paid because we took money off the table. And that's how we just took a trade, right? Very simple. Nice pure price action. So we're going to watch a breakout here, probably live. Pretty cool. All right. We also have an overextension, right? We're overextending on the 15. This is an EMA strat too, right? Overextending. Let's take a look at the hourly, right? What's happening on the hourly? Rising. It's rising. Okay, it's compressing into resistance. We should get a big fucking move here. This should be a big fucking move right there. We break that spot, this thing's going to shoot all-time high. Or not all-time high, to this previous high. Right? It's pretty neat how all this stuff sets up, to be honest. So for me, at least. I just think it's like, it's fun. It's because it's not difficult. You just have to break it down and go through the process. And if you forget, then maybe you take your time and go through it again, or write down your process. Okay, this is the first thing I do. Where are the EMAs trending? Okay, where is my structure? Where's the tube of toothpaste getting built out? Okay, and where's my breakout spot, right? And this isn't like, so some people are breakout traders, right? I can do both, it's fine. But the point is I prefer to find a breakout before it actually breaks out. Like, let's call it an early break before the big break, right? Because if I'm in at 50 cents and you're going to wait until $1.50 to get in, well, sorry to say it, but I'm selling some of my runners to you, and then I'm less risk. I have less emotions. I'm chilling. So thing's going to fucking rip as soon as it breaks 105.5. All right. Now let's talk about the trend line strategy. Probably the coolest strategy in the world. Let's take a look at the 5 minute. I gotta find a good spot here. Yeah, this will work. This will work really good, actually. Okay. So you have a trend line, and let's just say, for purposes of this trend line strategy, this wick right here, that little baby Jesus wick, that tapped this. So we have tap, tap, okay? Let's say that perfect clean tap. Well, we have a tap, then we have the trend line, right? Actually, you know what? Let me do this. I'm trying to calibrate this, right? So this is London. Okay, so we do have a trend line right here. Okay, tap, tap, and then you can buy calls. You have the trend line developed. Once you get it, you just draw it out. Okay, so you have one tap. You're like, oh, watch it. Okay, I got 2 taps. All right, there's my trend line. So then you wait. You don't buy calls, but you wait. Oh, tap again. Why are you buying calls here? Because you have the EMA on the hourly. Everything's in a downtrend. Because here you go. Here's the low. Higher low, higher low, higher low. And now they have a trend line here. Then they change the structure. So this is now support. If you're looking at structure, here's a level. Here's a level. So we're stair stepping. Back test, and now you have a trend line that's supporting your structure. You can buy calls off that. You should buy calls off this. So this is a bigger time trend line, and it breaks up, holds, and you buy calls. This is called the tap and go. Okay, trend line strategy number 1, the tap and go. Once you have a plus first 2 taps, you draw your trend line. Right? Ideally on the hourly, but when you're trading intraday on the 5 or 15, then you have to look at the structure on the hourly. Okay, now the structure on the hourly is over here. And you are looking at calls down in here. Well, why would it be okay with it on the hourly? EMAs are flattening, number 1, and we have a reversion play, guys. This is a play to revert. Look, at this point, we're at 57.70. We just bought calls at 57.82 on the 5, on this tap right here, 57.92, and we sold them right here. Right? So a 10-point pop. It's pretty good on calls. Let's take a look now here. What happened? This is the structure. We just looked at the hourly. And that's where it got, what? Oh, I'm looking at a different time frame. That's hilarious. We can go back and look at that spot. Here. Same shit, probably. Tap, tap. Tap. You can buy calls. Tap, oh, tap, buy calls. Higher lows, structure's changing. Right? So this is that area we just talked about on the hourly. Okay, we also have a mean reversion. And where was the mean reversion to? Right here. That's where the hourly 200 is sitting. Or hourly EMAs, my bad. So on the hourly price action was down. The candles were down here. But the hourly EMA on the 13 and the 21 was here. So it's only natural for price to magnet back. Why? Because it's an hourly reversion trade. And you're like, no, that's bullshit, dude. We don't do that. All right, prove me wrong. Prove me wrong. Let's do it. Let's go prove myself wrong. Right? I'm going to show you all the reversions. Okay. We have an hourly, the one area we just talked about, which was here, buying calls at 80. And where do we sell them? Yeah, 57.90. So that's a 17-point move. But look, extension away from the EMAs. Revert. Extension away. Revert. Extension away. Revert. Extension away. Revert. Extension away. Revert. Right? Extension away. Revert in. Extension away. Consolidate in. Away. Back in. Let's keep, we can keep going. We could do this all fucking day. Literally. You will not find an EMA that did not revert back relatively soon. So if we know that the EMAs can do 1, 2, 3, 4 extensions away, 4 hours, and you're coming into a heavy supply, man, you got some good risk to reward on some out of the money calls, a few days out, right? Because if you know you can probably revert back and you're extending out 2 or 3 hours into supply at 58.11, well, that move back to the EMAs, that's a 50-point move. These are layups, guys. Very simple. These are statistical strategies, right? RS loves statistics. This is a statistical strategy because if you look at it from his perspective, okay, when you're reverting away, say this is the range. So this is what he'll do. Tell me if I'm wrong, boss. This is the range we're in. He fibs this out, right? Fib, 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 right? Now he's fibbing it on a smaller time frame. So if these are all fibbed out, right, this range right here, okay, and that's a 59.30 to, that's a 50-point range, 58.72. If he's got this range fibbed out, this area right here is discount zone. This area up here is PZ, profit zone. How it works. It's great. It's backed statistically, right? And this is the same, and it's not the same because the precision of his levels are different, but it fits because look at the EMAs. They're up here. It dropped into this green line. This is a big fucking level. This is a pivot. And then what happens? You see the pre-market right up, and that's a pivot. So you see an overextension into a pivot, and you're like, oh my God, give me a mean reversion. Boom. Sell. Instantly. Now you can take profit zone here, and then you can get fucking puts. Where's your risk? Top of the zone, right? Buy a few DTE, 2-3 DT. Okay, extension, I'm out. 40 per minute. All right, that's extension into the zone again. I'm buying, sell, buy, sell. Like literally, like just ring the register back and forth, right? And that's the point is, like these are strategies through the EMA strat, mean reversions. Well, how do you know where to sell? You sell into the impulse move down. Leave a runner, right? Into support, right there. Okay. This is all Wyckoff too. It all fits together, right? And then what are they going to do after you sell the extension? Okay, you sell this extension, you kind of want to chill because unless you catch this move, you're chilling. And what are you looking for? To reload puts because you had this huge range break aggressively. So when they break it and they don't really retest it fast, which you could say this is a retest, but really after you get an extension down, there's going to be a short cover or a fast move back up. So you're looking for this zone to get retested, which they do right here. And then you can short that. Why? EMAs are in a downtrend. Don't fuck with calls unless you're playing an extension off of a big level, right? Now RS is trying to find his new zone. He's got a new zone here. He's not fucking with this. It's here to here. This range breaks. Now his zone is probably here to here, as my guess. Right? He's looking at this box. Now, if you're looking at this box, OG does this too. Right? He box trades. Right? He likes box. So there's the box. The bottom of the box. Same thing. Extensions. Look, extension down to the bottom of the box. You don't know the bottom's here, but then once they wick it, doji, we just buy calls off these lows. Okay, and if we know the top of the box is here, and then we look at the EMAs and they have a downtrend on the hourly, and then they're flattening here, and then uptrend here. Well, we're still in the bottom of the box here. This is the bottom half of the box. That's the bottom half of the box right there. Okay. Why is this not? That yellow line. This is the bottom half. So we can buy calls to sell at the top of the box here. Right? So I just want to kind of point out how all these things, they fit together like a glove. Right? And, obviously knowing if you guys are trading RS strategy too, and you know this in the back of your head about how EMAs and structure compresses, right? You understand it. You say, okay, well, here's my box. Okay, here's my box here. And here's my trend line right here. Well, you better be fucking careful buying puts up here in the profit zone, because you should know, based on the compression in the EMA strategy, that the box is about to break back out again to the upside. Downtrend, uptrend, compression. Tube of toothpaste pops, right? All right, now I'm going to table right back into the trend line strategy. So you had the tap and go. Okay, you're in profit zone, or so you're in the discount range. You take it, you start selling in here because you're looking to the left and you see support. So naturally, it's not going to just blow through it, right? So you're going to sell into this, right? And then you have a tap and go. So tap and go strategy 1. You buy the taps once you have your trend line established, right? Now we have the fake breakdown. Okay, now let's take a look at this trend line. Tap, tap. Now it breaks down. It breaks, but there's no retest. Breaks down. It did not retest back up. So you're not buying puts. Okay, so then you see this come down. You're like, oh man. Well, this candle you're looking at very carefully, and you're watching that. You're like, that's bullish as hell. They could break it back up. So what do? You wait. And then you could say, all right, I'm going to get in calls here because of this type of a candle is very bullish. You get in calls and you could ride it because you could be thinking this is a fake breakdown, not a true breakdown. Okay, because of the candle, because of the wick here, get bought up real quick, held, right? And it's doing what? It's holding this structure right here. You're looking over here. Support, 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 right? Comes back down. And what did it do? Hammered right off the support. Okay, so it held this spot. You can take calls off that, risking this level right here. It's very nice. Or you could wait till it reclaims the trend line, closes a candle above it, then take calls for this rip, sell, wait for another tap, and go. That's the fake breakdown, okay? The fake breakdown requires you to understand how to read candle structure, candle wicks, and buying pressure and velocity. You had an overextension away underneath the trend line, it is only natural for it to revert back unless it was going to build out like this. A bear flag and then fucking dump, right? So that's the next strategy is the breakdown. Okay, if this, I'm not gonna, we don't need to find it. Yeah, we could actually. Yeah, we could find one right here. This is a trend line right here. Very clear. Tap, you don't know the trend lines here until this wick comes down. Because first you're probably drawing this one right there. And you're like, no, and then you readjust it. And after you readjust it, now you know where to buy from. Okay, it comes down, nice tap. You can buy that tap, or you can wait till the candle closes and buy this for a nice extension up and out. Now, let's take a look. Oh, fuck, my son's up again. All right, it's fine. Now, this would be considered a flush breakdown, no retest. It doesn't happen very often. This one where it breaks and it doesn't come back up and test the trend line. Okay, these ones are tough to play because you almost, if you're going to get in on puts, you have to get in on an extension up away from the trend line, right? Way up and out, knowing there's going to be a reversion. Then you get in and you start to think, well, we got a crossover. Right, so the EMAs are flattening, making a lower high. There's a low high, then there's a lower high, and the EMAs are starting to curl. So you could look at this as like, okay, we had a huge rejection right here, right? Huge. And then they bounced it. And then we made here's a high, and then here's a lower high. And if you get into puts here, you could be thinking, man, yeah, they could tap and go, but this also could flush because there's probably really bad bearish divergence setting up here, right? So if I go like this, pull this section up, drop my RSI down, and there is, right? So here's the RSI up here, right? Then it comes down, and then, oh, no, it didn't make bearish divergence. I take that back. It actually did. My bad, it did. So here, so at this point right here, on this candle, this RSI peaked to right there at 56 and change. Then the next candle right here, it opened here, it shot up to a new high over this one, but the RSI did not make a higher high. It didn't go up. So that tells you a bigger move to the downside's coming. Okay, so once you see the bearish divergence set up and you get in down here or wherever you get in, you can buy that and anticipate a breakdown because you have the bearish divergence telling you a story. You have structure lowering, right? And then you also have a big rejection over here, and you have the EMAs curling and down. And now, if you get a candle close underneath this EMA, you can basically bet your money this thing's going to flush. And even if it retests and flush, it'll probably flush, right? And where's your risk? Take your trend line, you draw it over here. You get in here at 59.50. Your risk is a close over this 59.53. It's 4.5 points of risk. It's not a whole lot if you buy a little time, and then you can catch that nice big move down. That's how you want to be looking at these trend lines too, and combine it with overextensions and an EMA strategy and how compression works. My son is pissed. It's all right. My mom's with them. He's fine. He's like, give me food. I want food now. All right. Okay, so that was the breakdown. Then we have the failed breakdown. Now let's try to find one. Okay, here's the retest. Here's the breakdown and retest. The failed retest. Right here. So here we have extension up, making a high, a lower high, and stair stepping down, right? And the same thing's happening. Okay, here's a high, here's a lower high, right? And then they're stair stepping it down. Why would you want to get into puts? All right, well, you're seeing structure weaken, and here's your risk right there. And if you bet, I bet you we see bearish divergence. Okay, so we're over here. You bet your ass we did. Let me see here. No, we didn't actually. They just broke it down. Oh, yeah, they did actually. I take that back. So here, yeah, so here on this candle right here, we're at 59.50, right? And as we're seeing this trade, right? So this is how you play this. Okay. The actual breakdown. This one is one of the better paying trades. So what they do is here's your trend line, tap, 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 doji, it breaks down, it fails. Comes up, it closes, break down, fails. And then it shoots up and does a stop hunt, right? How do you know this is not going to fucking rip? Well, because you're watching this 5-minute candle to close. Once you watch this 5-minute candle to close right here, it closes under the trend line. You're immediately looking at the RSI and you're like, wow, there's the RSI here on this candle. You look to the left and you say, wow, the RSI was higher here. But where was the candle? It was lower. That's bearish divergence. Okay. Candle shot up, but the RSI was lower. That's bearish divergence. And that's your clue. The bigger move down is coming. You just got to let it play out. Then the rejection happens, comes down. And so that is, so if you get in, let's say you get in here on this retest here and fail, and then it gets up and out. It really doesn't do a whole lot. Maybe you're down 5% because it's just riding this thing. You're sweating a little. Then you get the next close and it flushes. So that's a 50 to, that's a 4-point move, chops, and it's still not building out anything. Now what's happening to the structure? It's weakening. It's in a downtrend, okay? And you're just waiting for it to pour out. And then you get a rejection. Now the EMAs on this time frame, okay, you're riding it, got under it, rejection, 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 then flush to the trend line. Then you're out. So that's a nice move to 43-ish. That's not like obviously that's a tough one to trade right there, but that would be the failed retest. Basically where the trend or the stock price comes down, it breaks down, it comes up to the trend line and it fails, and then it makes you move lower. Most of the time, those failed retests result in a big move down, really big. Because what is happening is people are chasing calls, and they probably don't realize that's breaking, or the price is weakening at that moment. Any questions on that? So you have tap and go, the fake breakdown, and then the breakdown, and then the failed retest breakdown. All right, now the special announcement for those that hung on. Okay, you saw the new channel. Okay, $500 to $1,000 challenge. Okay, so this one is going to be all the trades are going to be posted in there. If you got questions, you can post the questions in there too about the trades. I'm going to take a lot more care. Not that I don't anyways, but like I got to be really, 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 really picky with this. So to make sure that we can get this, so the people are playing this, their accounts up and double it. So I'm going to set up an account with $500 in it next week. And then I'll probably set it up Wednesday, but if I see something set up, I'll post it on Tuesday. I'll post in there, but you won't see my $500 account set up actually until Wednesday. Okay. I'm going to do it on a different broker, most likely. All right. Next thing we'll say is that's the special announcement. Now, aside from the special announcement, throw a 1 in the chat if your account is under 5K. Or you don't have to. Actually, you don't have to do that. You don't have to do that if you don't want to. Let's just do this. Throw a GIF in the chat if your account is under $7,000. Yeah, that's probably better because I don't want, because I need to know a couple things, okay? Because I want to know, because this is only going to apply to the people on this fucking thing. I told people if you're not in here, you don't get a part playing the game. Okay? Cream. All right. So this is only under 7K. All right, so 1, 2, 3, 4. So if we have 4 people out of all these guys that have accounts under 7K, if you do have a account under 7K, fucking post it. All right, it's fine. It's not a big deal. Anybody talks shit, they're fucking kicked out. 1, 2, 3, 4. Okay, 5. All right, so for you guys, if you don't have to participate in this, but you can. Okay, so we have, it's called the paper trade challenge. All right, and what we're going to do is, this is the deal. There's a channel down below called the paper trade challenge. Now, what I want you to do, how do I want to do this? So there's 2 options. And I talked to No Scoppin about this, actually. And I think what we're going to do to make it as similar as possible, okay, is I want you to make your paper trade account exactly the same size as your real account. So in there, I have it as a 5,000, okay? But I want to do this. Yeah, okay, that's what we're going to do. Yeah, so in here, well, we're going to do this. We're going to go I want you to take your account on a paper trade account, set it up. If it's 500, it's 500. It doesn't really fucking matter, right? And if you have a problem posting your paper trade account trades, you can send it to me, all right, privately. It's fine. Okay, I won't let it out. Not a big deal. But what I want to see is I want to see every fucking trade posted on the paper trade. Every one. The first person to take their account from whatever it's at on the paper trade and double it 2 times in a row, not once, they got to double it twice in a row in the next 10 trading days. It's pressure. I'm creating pressure. I'm creating parameters and I'm creating pressure. Okay. I want to see 2 things. I want to see the trades being posted, right? You can take a screenshot on your paper trade account. Okay. The second thing I want to see is your trade, the trade plan. I want to see why you took it, what your entry was, and it could be an alert too, right? It could, 100%. Here's the kicker: if you lose more than, let's say, 20% of your account on the paper trade account, you have to reset it. 20%. That's a pretty big cushion. Okay. You cannot lose more than 20% or you have to reset it. So if you have a $500 account, you cannot lose more than $100. You lose 100, fucking reset it. Okay. So number 1, I'm going to put this in that channel. So we're going to type this out. So it's going to be, let me see here. Edit. I'm going to say is taking, all right. Actually, you know what? I'll put this down here. I'll make a new thing, right? We'll say, all right, paper trade challenge. The winner's gonna get something. Paper trade challenge. All right, so this is going to entail number 1. So you're gonna have to all right, what do you got? Post trades, entries, and your exit. Number 2. You have to post end of day P&L on the paper trade account. Number 3. Let me see here. Post. Oops. We should post where, like post the chart. I'll say post the chart and what your trade plan was, or like what's your trade plan, what your trade plan is / was, and whether you stopped out or not. So like, and where you stopped out or took profit and why. This is how you have to, like, you may think, oh my God, this is a fucking lot. It's not really. It's not at all. Number 4. All right, then we're gonna say each paper trader has to set the account at the level of your cash account. Has to be under 7K. All right, then number 5 is you have to reset the paper account if you lose more than 20% of the account. It should be 10%, to be honest with you. I'll put 15%. 20% is like way too much. That's a lot. We'll do 15 just because the smaller accounts. Like,
No, we got
10. We have to do 10. Yeah, we got to keep it at 10. All right, so it has to be 10. Sorry. This is going to make you guys enter better. That's all it's going to do. Number 6. I don't care if you stop out and you have to reset your fucking account 5 times in a row.
get your entry better.
That's the point, right? Number 6. All right. Goal and target is to take the least amount of trades. This is huge. Huge. The least amount of trades. And
Double the
paper trade account 2 times in a row. The winner will receive a cash reward. I hope I can do this legally. I mean, like through Discord. Fuck it. Okay. All right. So it's going to be $300 cash reward. I'm going to say number 7. If there is not 100% transparency, you are eliminated. from the competition. Okay, that's pretty simple. Compet. All right, and the second piece will be if nobody completes in 2 weeks or in 10 trading days, it will continue on. It will go on until we have a winner. I might give a bonus if somebody does it within 2 weeks. Okay, so there it is. There's the write-up. So post trades and entries, trade entries and exit. 2, post the end of day P&L in here. 3, post your chart and what trade plan it is, and was, and where you stopped out. So basically, like chart it like this. OG does a good job of this, actually. So go here. It's like, okay, you take an arrow, you do this, text, bought 1 DTE 560 SPY puts at 1.10. Okay, right? There's that one. Boom. And then you go here. Okay. Sold SPY puts at 1.14. 1.4. Okay. Boom. That's it. You take it, and what you do is you go upper right hand corner, you take screenshot, copy, and then you paste it in the trade zone or in that paper trade challenge. Okay, then that way I can review it at the end of the day, and then what we're going to do is I'm going to go through your habits, and we're going to identify this shit, okay, and find out how we can make everybody a high quality, low risk trader. Right, and this is how we're going to do it. So if you have a question like in your head, well, I don't feel emotion. I don't feel the pressure. It's not the same as real money. What do you think I'm going to say about that? This has clear parameters. There's pressure here. There's a time frame, right? You don't want to be. I don't want to see you taking 30 trades. Blowing your account, like resetting it 10, 15 times. I don't want to see that. Like, you can do that, but is that really going to help your trading? Right? Is it really, really going to help your trading? No, it's not. Like, how are you going to make, like, this is the mindset. I'll type this out. Mindset is I am doing this to change and improve my mental and technical process in the moment when I am trading, and after, and before and after. This is a business. This is my business. This is my business. Okay? That's like your mindset. Okay? What am I going to do when that moment comes where we open up the market and you thinking, all right, I'm going to fucking win this fucking paper trade challenge. I'm going to do this. I got this. So what you're going to do is you're like, okay, market opens up, pushes up. Okay, number one question is where are you going to want to buy calls? And where would you buy puts? So I'll put a bunch of this stuff in there for you. 1. All right. I'll say things to think about when finding great trades. Number one, where / what levels would I buy calls and puts? Number two. Then the next one would be, what's the best contract? And what is the contract chart showing me? Levels showing me where to buy. Okay, and three, when I am in the trade, what is the best way to think in the moment to eliminate emotions and fear? I'll tell you why. The answer is looking at structure, velocity, right? Buyers versus sellers. Okay. EMAs. Are we riding on top or under? And these are some things to think about, right? And it's the process. So first is the process that you go through when you identify this trade. And then it's like, okay, well, what levels am I going to buy calls off today on this stock or this index or whatever it is? And what levels would I buy puts off of? And okay, all right, what contract? All right, well, it's coming down on my level. I need to look at this strike because it's not too far out away, right? And I like that spot to buy calls or puts. Then you're like, okay, well, now I'm in the trade. I got filled and it's looking good. I'm now green 2%. Great. Now, when you're in the trade, you can't be shitting yourself looking at the fucking P&L or this or that or whatever it is and sweating, because you know what? This is real money. Even though it's a paper trade channel, you're playing for fucking real money, right? And you're trying to do this in a very, conscious effort to repeat. You want whatever you're going to think about and whatever you're going to go through in that process to be your fucking Bible. Like RS has his Bible. I have my Bible. I don't fuck around. I don't mess with other people's shit. I do my own thing. Right? I will not listen to other people's stuff. I'll listen, I'll read it, but I don't care about it. Like, it means nothing to me. Right? And then when you're in the trade, like that's when the money is really made. Like that's when it's either made or it's saved, right? When I'm in the trade, what is the best way to think about or to think in the moment to eliminate emotion here? Okay, let's think about this. Okay, what's structure saying? What's bearish divergence saying? Is this an extension? Is this, you know what I mean? Like, where am I selling this? Where do I want to sell? Am I being greedy? Is this a box I'm working off of? I'm buying calls at the bottom. I'm selling them at the top, right? What are you thinking about in the moment? Okay, we're in the moment. We're riding up. I got calls. It looks good, and it's stair stepping up. We're coming into volume shelf and structure where there's supply. I'm going to sell this and lock in my first green trade for $30. Boom, done. Right? type it out, post it, you're good. Does that make sense? It should be really clear, very, very simple. Have money time, PB, DAC, and cream, and is that it? Yeah, that's it. All right, so I'll put your names in there, and you guys are on it. If you don't want to play, it's not a big deal. OG, cream. Just gonna make you guys better traders. Cream, DAC, PB, and then it's what was it? I think there's somebody else too. Money time. That's right, money time. And then money time. All right. There's your home. And when you guys see me alert the $500 to $1,000 challenge, you can take it. But apply the same thinking. Okay, guys? Apply the same fucking thinking. That's the key. If you just do the paper trade challenge and you're fucking crushing it, and then you go do the regular money and you just take the alert blindly and don't think about the same shit, you're not going to improve. Go through the process, because the more you do it over and over and over and over again, the more it becomes a clear habit. And then the more you, like, when you don't do it, you're like, oh my God, I feel stupid. I feel blind. I can't do this. Look what happened. Our BTC trade is up $1,000. We're up 1,000 on BTC in this move. Look, reversion. Boom. See ya. Right? So we called this move. Very simple. Bull flag, 15-minute, right there. Broke the downtrend, popped and ripped. So now we're at 106. Pretty cool. So we took a trade on BTC and it's fucking ripping. So if you guys have any questions, let me know. I'm happy to help, but I really, and the thing is let's say, for example, the challenge is done and somebody won and all that good stuff. If you find yourself struggling to keep bouncing back forth, red, green, go do the challenge again. Go back until you can complete trades after trades on your own account and do the execution the right way. Like, this just only makes sense, right? If you don't perform it when you're live under the pressure of real money, go back to paper trade challenge. Okay, I got it. All right, I did it again. I did 500 to 1,000, or I took 5,000 to 10,000, or I got 4,000 to 8,000. Whatever my account is, you got to double it. Okay, and also you can't. I forgot one rule. Fuck. There's one last rule, really important. Okay. Entries into a P&L. Hold on. All right, and this is kind of a big ask. It's really, we only want you to use 25%. But since you have small, for guys that have like $500 accounts, $600 accounts, you're going to have to use more capital. So we'll say, you can use 50% of your account per trade. Hold on, I'm going to make stipulations. 50% of your account. No. Let me think here. No, we'll do 40%. That's more realistic. 40% of your account if you're under. Here, let me think. I got to make sure this is right. RS, are you there?
Yeah, I'm here. What's going on, bro?
I'm trying to figure out, because I can't have them full port or half port and
Yeah.
double. You know what I mean? Like, that's just going to defeat the whole fucking process. So try to think what a reasonable thing, because I can't tier it either. I can't be like, well, small accounts under 500 can use 40%, and then accounts from 2 to 3K can only use 10%, right?
Yeah.
So maybe I have to.
What's the smallest account that we're looking at? 500, basically.
Yeah.
So I mean, probably like
15%.
15%. Yeah.
It's a $150 trade.
Yeah. So that gives you like four opportunities, or not a little more than four. It gives you like 8
Yeah.
opportunities to look up. I think.
Okay. Can only use 15% of your account per trade. Yeah, because it needs to make people like think and be strategic. Yeah, this is a big one here. So, all right, I'll highlight this one. What do you think? Is there anything we need to adjust?
Let me read it. Post trades, interest and exit, post day. Are they picking out their own trades to trade, or are they taking?
They can take anything, their own trades or our alerts.
Okay, got you. But if they take our alerts, it has to be an alert that's within the $150. If you say it has to be within 15%.
15%. Yep.
So yeah, y'all just got to make sure that like if there's an alert that the price of if the premium is $250, if you have a $500 account, you can't take that at that moment. You got to wait until your account gets to where it's 15. That's 15% of it. Yeah.
Yeah. You could take it on your cash account though. That's fine.
Yeah. So this is just the paper trade account, correct?
Yeah, this is just for paper trade challenge because then the winner is going to get $300 if they follow if they complete it in the right with the right parameters. If they break a parameter, if people don't post, if people aren't posting the parameters within the day, they're going to be eliminated.
Gotcha.
I don't want to sit there and see half-ass shit going on because I mean,
yeah.
I know you have your process, I have my process. And like this is the shit we run through like literally every day.
It really
like,
is. It really is.
And it should be automatic, and that's how you build a good habit is making it automatic.
Yeah, because when I like just FYI, when I was struggling with options and shit like that way back in the day, like I looked at every single trade I would take, every single one, and grade every single one. So it builds that like definitely. I think this is good.
All right. It just makes you learn how to get a really good entry. Like that's the name of the game. Because then you learn patience and you learn like entry skills, and then you're like, okay, well I'm up. Let me lock it in, get grain. Then you learn profit taking skills. Like profit taking skills needs to be a habit, especially for a small account. You can't expect to make 100% on every trade. If you could do 10 trades at 25%, you're going to win the challenge.
Yeah.
All right, cool. All right. Anybody else have any questions? So Big Teddy Thunder. If you have an account under 5K, you're more than welcome to join. But anybody that's not on this thing, they're not welcome. I told everybody in chat that they had to be on the stream. So other than that, if you have any questions, let me know. And you guys know the top stocks are watching. Let's have a great week. Rest up. Tomorrow's going to be a chill day. I'll probably be on live for a little bit, fucking around with futures. Maybe alert a trade if I see something amazing that sets up. But a little longer than we wanted to go, but we had to cover a lot. So enjoy the new channels. If you want and you see a meme coin or some shit coin on BTC, feel free. That channel is pretty much wide open. You can do whatever you want in that channel. And then we do not have Architect with us anymore. He won't be with us, and that's fine too. So hope you guys have a great Sunday. All right, peace.
Good class.
Thank you.
you.